balance every strike all day, every night. In a battle for my life, but I stay fastidious, flowing on the mic. And I gotta wear shades cause my future's so bright. Is you with me? Then come on, come on. There's a party up in heaven, shouldn't be too long. I'm sure if you know it shouldn't be too long. Invitations are exclusive on the working song. Is you with me? Then come on, come on. There's a party up in heaven, shouldn't be too long.
The Trump administration is coming out and says there's current.
In my lifetime, I write rhymes, keeps me on the path.
Wants to do. And here's the title of the executive order he put out: removing barriers to American leadership in AI. That was the title of the executive order.
Hey. Stay like the breeze, cause I'm moving in need. Stacking up my cheese, up to God on my knees. Hey. Gotta stay humble in this jungle for the blood clots, hustlers and whatnot. Love to hear the gunshots, it don't stop, only gets more gritty. So I get real busy, while the spirit be with me.
Is you with me?
Then come on, come on. There's a party up in heaven, shouldn't be too long. Round shorty, if you know it shouldn't be too long.
Oh, for real? For real, for real?
Come on, come on. There's a party up in heaven, shouldn't be too long.
Just freeze on me, alright. Freeze then.
Life keep moving along, it's all change. Life keep moving along, it's all strange. Life keep showing me sun and then rain, but I won't stop trying to win the whole game. Life keep moving along, it's all change. Life keep moving along, it's all strange. Life keep showing me sun and then rain, but I won't stop trying to win the whole game.
This was, though, a pretty dizzying week for Broadcom shareholders, as we do know that there's some vague timetables for their AI revenue.
No, it wasn't for Broadcom. No, it wasn't.
2026, as well as some concerns about tightening profit margins. But the company did receive this $11 billion order from AI startup Anthropic PDC in the fourth quarter, and they did warn that right now margins are narrowing because of these AI product sales. Broadcom also did hold off on giving their annual AI revenue forecast, saying that this is a moving target. They're not going to be giving the same
You know what I'm saying? Every now and then you gotta reflect on, you know what I'm saying? Take a step back. Think about life, you know what I mean? Yeah. I remember throwing bodies out the window, on the back road, puffing on endo, chasing girls with arms. Fingers crossed as approach, slowly praying shit on that like she don't know. I remember getting high before school started. Yeah, when we lost grits, feeling broken hearted. So many things that I've seen on the 3 years. Got me all quiet, buried in my peers.
Hey.
We all struggle for a new day. Most of the other homies looking for a new way. A little change and I ain't talking about one bomb. That's right, fuck Illuminati, go and bring the drum. It's all the same one film, you can get shot. Wearing the wrong color, walking down the wrong block. I pour some liquor, second prayer for the ones we lost. Each one teach one, cause it never stop. Yeah, all we like is precious. Each one teach one, these are my reflections. Ways in these streets, what? These are my reflections. Ways in these streets, what? These are my reflections. Ways in these streets, what? All we like is precious. Each one teach one, these are my reflections. Ways in these streets, what? These are my reflections. Ways in these streets, what? These are my reflections. Ways in these streets, what? People skipping class, they need to grind. Picture second, pull the check, move, I'm getting mine. That's right, along the line, had a baby on the way. I lost a few friends in this motherfucking game. Fuck the police, right there on my neck. It's just no plastic, no respect, no the double tip. Only cause if you don't, people can come through and take everything you want. It's right, remember, faces rhyme, smoking marijuana, remember neighborhoods before met guys. Yeah, went from playing the block to chasing money, get dreams up in the city, street, and all the permit. Yeah, and I remember, all money is it. switch. Each one teach one, need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? All we like is bricks. Each one teach one, need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? All we like is bricks. Each one teach one, need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? All we like is bricks. Each one teach one, need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what? Need some apple flips. Wait till he switch, what?
Hey!
But this idea of like evolving trends where consumers are seeking more of that leisure wear that is with those consumers, plus facing the slew of competition. I mean, like you've Beyond Yoga, Aloe, Yori, the list just goes on and on now. We can all think of, I mean, like 10 retailers that face specific so all that to be said is that there's lots of like
Every card I play got me on top.
CEO and
Suit up, you don't, you love. Watch, we taking over the spot. We going hard from the drop. I see how you playing it. I know where you coming. I see where you going. That's why I ain't saying shit. Your message just isn't relaying. I'm trying to relax. I need a vacation. All of this working, I don't have no energy left to be angry. That can fuck me and pay me. This shit all for me so simple. I like working out my own issues. I'm inclined to never told a pistol. What's wrong? Got this whole spickle. Would you mind if I'm roll with you? No, I lost, I'm just so efficient. Rose going to this soul, glisten never sold out cause the shows did it. Hey, this shit right here got an ambient mood. Really, I'm just not a fan of these dudes. Really, I'd rather not stand in the queue. So I know how much damage I could.
Yeah. Making breakfast. Got some green beans and peas on the stove. I'm getting dressed. Here I come, y'all. Alright, y'all. Halfway got my clothes on. About ready.
And that they're not going to stop doing that for a long time.
It's unlikely.
So is that QE in your opinion or no?
Yeah, so it's definitely QE. If you leave the bank reserve level higher than it was prior to starting the program.
And then you're going to have a heavy, heavy purchasing program through April, through the tax season, and then it'll likely sunset from there. But the reality is, it's highly unlikely to ever sunset to zero unless they want problems in the repo market. So in our opinion, the risk that this program ultimately grows over time into some form of perpetual debt monetization is actually quite high.
So also, you talked about Bitcoin, and there was talk too that it really removes a headwind for Bitcoin. What do you think about that? The minute we heard that, they were ending that on December 1st, and essentially QE, that removed a headwind for Bitcoin. Bitcoin made a big jump higher. I mean, had been at 80, went to over 90. Your thoughts on Bitcoin? You mentioned Bitcoin a moment ago. What's your thought on Bitcoin now?
Yeah, great question. So with regards to Bitcoin, gold, stocks, risk assets in general, maybe not credit because credit's priced so tight, but any asset that's sort of an anti-dollar asset, what the Fed's new policy framework does is it takes I would say the bottom 10 percentile of the left tail of the distribution. If you had a return distribution, you took the leftmost part of the left tail, you're picking that up and you're putting it on the right side of the distribution now. The Fed has eliminated the worst financial outcomes, at least for now, with this new reaction function, and they're making the upside, in our opinion, greater.
And you talked about digital economy growth. Tell me about that. That's something you like and believe in right now.
Yeah, well, the world's going to change as a function of the trillions of dollars of capex that we're throwing at this AI super cycle, and in our opinion, we think we are still probably mid-innings in that trade, certainly with the supportive fiscal dynamics, supportive monetary dynamics, will ultimately lead to supportive liquidity and growth dynamics, so it suggests that this trade has some room to run. However, I would caution investors and the general public. At the end of this AI trade rainbow, whenever the rainbow ends, we're going to have either a secular bear market in stocks and the economy, or a secular bear market in society as a function of the impact that AI is going to have on the labor market. It could be both.
Nice when we have a secular bull market, but that's not what you're talking about. So how do you tell folks, I mean, if you're going to give them two pieces of advice to make some money, whether it's near term or long term, what would you say, looking at the charts and the way you do this quantitatively, how do folks maybe make some money?
Yeah, the two things, just general evergreen pieces of advice. Don't overtrade your account. Only trade your account when a risk management signal is triggered. And two, You don't have to pick factor risks to survive and thrive as a retail investor. You don't have to pick small caps versus large caps, tech versus financials. Just go buy the index beta, low-cost index beta. Get yourself allocated to gold to outrun the financial oppression. Get yourself allocated to Bitcoin to outrun the monetary debasement, and get yourself allocated to stocks to take advantage of the productivity growth we're likely to see.
So you should have gold, Bitcoin, and stocks in there.
Yes.
And the indexes, you said. What about the bond trade, the fixed income? A lot of people have been interested, and we saw inflows into ETFs for fixed income. Your thoughts there? Because I know people are doing well on the short end, but I guess if Treasury
You really can't play them.
maybe look further out for duration.
Excellent question, Nicole. So our research has identified since the summer of 2023 that there is a geopolitically driven supply and demand imbalance in the Treasury bond market, and as a function of that, it's highly likely that institutional investors will start to diversify their wealth, their core asset allocations away from the Treasury bond market, into other forms of money like gold.
Come in here messing my life. They can be lose my kid.
Our core asset allocation.
Get on out of here.
In October of 2024, we took our 30% target allocation for bonds and replaced that with gold in October of 2024.
Wow, that was a good move.
And the game you play.
It took a lot of courage to tell some of the top institutional investors on the global Wall Street that we're no longer going to participate in the bond market. But obviously, in our opinion, that was that call was rewarded. Obviously, by the price of gold.
Worried nobody wants U.S. Treasuries?
That will be an issue, an increasing issue in increasing quantities as we move forward in time, particularly once we get past this.
We got 8 minutes to market open. I'm up on PL. I know that much. PL's gone.
Ratio over the next couple of years, and so ultimately that geopolitically driven supply-demand imbalance is going to continue to widen, which ultimately requires more and more reserve management operations, or whatever the Fed wants to call it, monetization.
I got some green beans. I got some peas for breakfast, y'all. Boy, that's my stuff, boy. This is so good. This is my cereal every morning.
Kick off the morning with the data and decisions moving markets. Morning Trade Live breaks down the macro foods driving Fed price action from Fed policy to global growth to inflation.
Look, I told Fawcett it's here and he's the coldest, just so y'all know.
Morning Trade Live, where the markets move weekdays at 10 a.m.
Live or on demand. Head over to schwab.com/coaching and start learning today. Tune in live or on demand. Head over to schwab.com/coaching.
Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content.
My man Nasty on the beat. You know what I'm talking about.
And more time learning.
You know what I'm saying? I still got some bars for you guys. Don't think I don't got no bars.
Welcome back. Getting ready for the countdown trading after we saw the Dow, the S&P, and the Round also closed at records yesterday, not the NASDAQ, but it's been some good news this week. We've also gotten the Fed moves. Sam Bottas is with me. We continue to watch all the breaking news this morning. morning. We've had mixed futures this morning. Good morning to you, Sam.
Very good morning to you. Happy Friday to you, Nicole. And we are seeing a mixed picture across the evening.
IWM cannot be
It continues
stopped.
to suggest that we are seeing this
I'll tell you that right
rotation
now.
out of some of the big tech names off the back of the Oracle earnings, the Broadcom earnings, and of course into other parts of the market, which is why we're seeing perhaps an outperformance as far as the futures are indicating on the Dow versus some of the other indices this morning. You've got the S&P futures turning, or at least pointing to a bit of a softer start as well as the NASDAQ as well. So a little bit of a mixed start as we get up and running here today.
We test right here at 691.
We've got a lot of earnings to get you across and already have done so with the likes of Broadcom, Lulu, Costco. There are some key names that we've been tracking this week. But also on the macro front, no data today to work with, but we've actually had Ginsby out this morning speaking on media. He's been talking about how he is optimistic on rates coming down in 2026. That certainly is what the Fed is penciling in here, but uncomfortable with the front loading that we're seeing coming from the Fed, which is obviously why he dissented and thought the Fed should perhaps sit on its hands. Schmidt also coming out with a statement this morning, according to CNBC, that inflation is too high and they see a balanced labour market as well. So these were the reasons behind why we saw these dissents. So that's obviously something to track. We've also got these headlines around the Trump executive order on AI regulation 2 that we're working with. Nice day for cannabis stocks off the back of this expectation that they're going to reclassify marijuana as less dangerous drug too. And then also, as we mentioned, we've got Broadcom under pressure. Let's see if this continues to drag down the broader sort of AI theme today. And then we also have a little bit of news out of Tesla today as well, Nicole.
Yeah, I know. And yesterday we were talking about SpaceX, how, we were looking for Elon Musk and SpaceX in the IPO in 2026, but the Tesla sales down.
That's right. So Reuters have managed to get its hands on some exclusive data here. This is from Cox Automotive, and basically what they've suggested here is that the US sales now at a near 4-year low in November, and that is despite the fact that they actually rolled out new and cheaper versions of their EVs just in recent months. Now, why this is important is because everybody's trying to gauge the appetite here of these more affordable vehicles in the market, particularly post the tax credits wrapping up at the end of September, and whether there is the demand out there. But I suppose these numbers continue to show that the rate of the EV adoption, or the rate of the demand that we're seeing for electric vehicles is just not there. So it's interesting as far as the commentary that they've been quoting here as well, saying
it came all the way down here to short the gas. Came way down here
for the standard variants. So these are the new models, obviously the new variants that Tesla's come out with that were supposed to boost sales after the tax credit expiry. So this is something the market is watching very, very closely, Nicole, to gauge a sort of a barometer of the kind of demand that we're seeing out there post the tax credits now that they've wrapped up, which did help sales. But now we are, we've moved on from that. They are trying to attract more buyers with more affordable cars here in the market, but it looks like the initial numbers that we're getting, at least that Reuters has managed to get its hands on, still indicate that there's just not appetite for these vehicles.
All right, well, we have a lot of names to watch. It's Sam, we're looking at Costco, we're looking at Broadcom. We have the record closes yesterday. A final quick thought?
Yeah, look, I mean, we did see some follow through out in Asia and European equities as well, as far as picking up the baton from Wall Street's records yesterday and running with it. A couple of stories around international tech news with regards to China trying to build up its AI ambitions and, sort of state-backed capital support for its industry to compete with the likes of NVIDIA. Also a bit of news out of SoftBank looking to make an acquisition there for data centers as well. So we'll see some big platforms.
So the sales for Tesla near multi-year lows. We'll also have Lululemon in the news as we break in, have the opening bell. We'll watch for that. Good to see you, Sam Bonus. Thank you. Here's the opening bell.
Bill.
And we are off right now. We have Chipotle. CFG ringing the bell here on the floor of the New York Stock Exchange. Tesla right now, we're just finished talking about those sales. Actually manages to start off with an up arrow. We'll also check on Broadcom too. But we are seeing a mixed bag as anticipated. The S&P is down 11 points at 68.89. The NASDAQ 153 points, more than a half of 1%. The Dow's gaining 96, and the Russell small caps are higher. We've seen gold up $57. You just heard Darius Dale say they moved a lot of folks out of bonds into gold and Bitcoin and other assets. 10-year bond yield right now at 4.21, so that's been in the higher end of the range over the last month. $98.07, and looking at Bitcoin trades, at least has enough arrow there for you. 92,275. That's where we stand. We continue to look at some of the big movers here on Wall Street. Joining me right now is Diane King Hall, taking a look first up at Costco, I believe. Good morning.
Yes, indeed. Good morning, Nicole. Yeah, Costco posted its quarterly numbers after the bell today. We usually have an indication of where Costco is going because of the cadence of their monthly sales. So revenue, not surprising, coming in essentially in line with estimates. EPS did beat expectations at $4.50 versus the expectation of $4.56. Sales rose more than 8%, 8.2% year-over-year comps. Comparable same-store sales increased by 9% in the U.S. and 6.4% globally. You had digital strength driving some momentum here. E-commerce sales soared more than 20%. Website traffic jumping 24%. App traffic rising more than that, up 48%. They do a lot of overall same-day delivery with Instacart, Uber, DoorDash. Black Friday, they say that broke records. It generated more than 250 million in non-food e-commerce orders in one day. They said, that. They sold a lot of pies for Thanksgiving. Strong demand for their pizza. One of the things they are still fighting is tariffs. That's been a challenge for them. They have some exposure. A third of their U.S. sales comes from imports. So tariffs are a cost pressure for Costco. They're responding by trying to source more products domestically. They talked earlier this year about working on their supply chain and sourcing, about that, consolidating some of their global buying, adjusting some of their category mix to avoid the high tariff items, but they're also taking it to the courts. They've taken some legal action on tariffs. They sued the Trump administration trying to seek refunds on tariffs that have already been paid out and attempting to block further collection while we're in this kind of limbo period awaiting a decision by the Supreme Court. Overall, the results just aren't enough to wow investors. Again, the sales numbers, we kind of know where they are since they put out that monthly report. I often think about the conversation earlier this year where there was the talk about doing away with quarterly reports. Obviously, Costco does even more than that. They give out the monthly sales figures, so it's kind of baked in. It just hasn't been a wow factor for investors this year for Costco on the whole.
I'm ready to fall off my chair with the pie stat. I mean, first of all, nobody bakes anymore. Nobody makes a pie. Second of all, my dad
I made a pie.
The pie, and he has all these pie stories, the battle for the pies. And there's a place out in Long Island that's very famous called Briarmere Pies. It's been there for like a century, and people stand on lines to get pies. I didn't realize pies were such big things. We're also going to be getting retail sales next week, and we're talking about another retailer, and that's RH, the Restoration Hardware. Earnings. Let's get into that one.
So, the pies. I know, right? We'll move on from the pies and talk about the furniture to support the pies, like your dining room table, for instance. RH shares rallying more than 5.5% right now off the back of its quarterly results. They did better than expected on revenue. Revenue coming in at $883.81 million. Adjusted EPS though was a miss at $1.71. She was looking for $2.13 on that number. But they have strong growth in rivals, so they outpaced competitors like Lazy Boy and Wayfair. So again, strong revenue despite tariffs. They talked about tariffs earlier this year. You remember there was some colorful language when tariffs first hit with the CEO on the earnings call, because it literally hit live while they were doing their earnings announcement earlier this year. So they struggled because of their exposure to tariffs. But this most recent quarter, they did perform better than expected on sales, even with the CEO Gary Friedman saying the worst housing market in decades. So he pointed to that, and he talked about the disruptive nature of our brand, talking about RH. So RH, in theory, with the K-shaped economy, it should be supported by the higher end consumers, but be fair in terms of buying furniture, not buying furniture in the sixth quarter. So, but it looks like they're turning a quarter. So now,
Yeah, and you know what's interesting is you're not buying a lot of some of the furniture stays for a decade, right? I mean, it's not like the laptops people bought during COVID, and now they have to upgrade all those laptops. It's a little different with this kind of business. How about we get to Citigroup with an upgrade? So Citigroup has already been an outperformer year to date, and JP Morgan Chase says there's even more.
We gotta see if they can break through this. We gotta see how much bearish they are. They're getting a nice bounce right here.
They're boosting their price target, the new price target.
We just gotta see how much.
So that implies
See if the bulls are gonna come in and be in control or not.
The stock already had a massive run this year, like others within the financials, but JP Morgan Chase saying Citi said to benefit from solid economy, stronger M&A activity, and a favorable regulatory climate for the financials. And they also point out their view that Citigroup is cheap relative to peers. Again, they climbed more than 50% this year, but JP Morgan Chase turning more bullish on this one. All right, pretty exciting stuff. Thank you. I mean, I couldn't believe when I just saw the 10-year bond at 421 a short time ago. It's very interesting to watch the banks do it. We have a lot of guests who want to pick financials that they do like. Diane King Hall brings you those two morning movers. Coming up, could hyperscalers underperform over the next 5 years? Our next guest will explain why, and we'll get the details on that, why he thinks that. Opening bell. We'll be right back.
Build with peace of mind while receiving SSDI. All self-employment services help you protect your SSDI benefits while you return to work.
No, you don't. No, you don't. I'm like, no, you don't. Oh, nice all bounce right there. Let's see if IWM is getting it. IWM is trying to do it. Damn, that's a nice little, ooh, goodness. That was going crazy in pre-market, wasn't it? Look at PL trying to do something too, boy.
Last year, my dad had a stroke, big shock. This person that I've always seen that force my family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim was my financial consultant that program had 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-winning analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
All right, welcome back to Opening Bell. Right now, let's see the Dow Jones Industrial Average up 105 points. So we're clocking in some new records today because we had a record close yesterday. So continue to watch that. The S&P, on the other hand, has been down. It's down 1 point. Joining me right now is the Atomic Lane Grove with us, founder CEO Rebecca Well. Thank you so much for being with us. Some of your thoughts here on what's going on in the markets between now and the end of the year. You heard from the Fed. You see some all-time highs. Your thoughts?
Good morning, Nicole. It's great to be back. My thoughts on what happens in the year end. We're still dealing with an environment of uncertainty around the direction of the U.S. economy, U.S. consumers. And we're seeing this play out in real time with the Federal Reserve and the Senate and people advocating for more aggressive cuts and no cuts, and it's really just a confounding time about what's going to happen to the U.S. consumer and all this. But for December in the market, really it's just wait and see on this economic data that's rolling out, in my opinion.
You get tired of the hyperscalers, Tony?
I work with a lot of their employees, and there's, I would say, a lot of anxiety, sort of the word of choice around both the stock price, what's going on over markets, but I'm used to it. I've been doing this 18 years in Silicon Valley, so it's par for the course, I say.
But you're worried that maybe when you look at the market and the big picture, that's not necessarily the place to pile in your money. Maybe the hyperscalers may be the underperforming group. Is that right? Is that over a long period of time?
When I look at these things and discuss these things with our clients, these tech professionals, I try to give them the big picture of that history has not been kind to these large, excessive infrastructure rollouts over the past 2 or 3 centuries. And just keep in mind that trees don't grow in the sky forever, and take as much risk as you can afford to take. And, let's not make sure we concentrate too much bets. That's how people get knocked off course, and that's how bad things can happen. But really, to make one bet on one hyperscale or another, I don't know if I can really say definitively, Nicole. But we handle and take care of things we can control in this context.
Understood. So what do you think is maybe something to balance out a portfolio and maybe opportunities outside Max 7 or some more tech growth?
Well, almost anything has trailed with the magnificent 7 over the last 10, 15 years. But what we try to do is try to diversify those tried and true areas in the U.S. markets, mid and small cap. Value stocks tend to be looking pretty appealing as well, both here in the U.S. and definitely abroad. They're been one of the strongest performers year-to-date international value, along with good old-fashioned fixed income, along various credit types, high yield, intermediate term, government, non-government. Those are still having a great year, but they trail off the S&P 500, I'm sure, but those are still mainstays in our portfolios.
Yeah, understood. I mean, at this point, where do you think the path of least resistance is for the S&P 500? I mean, do you think we see 7,000, 8,000? I mean, there are some projections for even 8,000 by the end of the next year, and even 7,000 this year.
We shall be buying our S&P under $10,000 cap sometime soon. It could very well, Nicole. It's given the way earnings are growing and the rollout. This high trade can keep rolling, honestly. And how far it runs, I don't know. But as you've seen in past run-ups like this can go on for a long, long time. Valuations can get more stretched.
Retest right here.
It's just a matter of when and how much you eventually say I'm pulling and bail out. I can't know for certain, but I feel like valuations and what to expect at the S&P 500, history will tell us that we're probably not looking at a good long-term 5-10-year return based off where we are today. That's what history tells us. But in the short term, 1 year, 2 years, could be very well be higher from here.
And what about rebalancing the portfolio? I mean, I know there's always a lot of window dressing at the end of the year, too. But is there anything with the rebalancing or allocation that you think should be done?
I think every one of our client portfolios has benefited from the Mag 7 appreciation. It's this time to eat your vegetables, so to speak. Take some gains off the table, rebalance yourself into those areas that have not performed as well, and get back to risk. That's the important thing here. And no one likes paying taxes, but as I tell our clients who live in the high tax state of California, that it's a blessing to be able to pay these taxes because everyone's going to want to make some money, take some gains, so that we don't avoid when the market turns on us eventually, and make sure we're in the proper position.
Logs.
Yeah, understood. Probably just gold, Bitcoin, anything else, all investing that you do like?
Gold and Bitcoin, I'm not going to comment because I don't even have time here. Not really a fan, I'll put it that way.
Hey.
But in terms of alternative assets, yes, they'll definitely have a role in one's portfolio. Private credit, private real estate, infrastructure, private equity. Those areas are, I think, for the right investor, can make a lot of sense. But you really have to be careful on who you put your money with, as there are If you pick the wrong man and you pick the wrong horse, you'll be worse off than if you just stuck into plain old S&P 500.
Tony, it's great to chat with you. Thank you for your insight. Really appreciate it. Tony Lippman at Tribeca Wealth. Thank you. Coming up, we'll take a look at the key levels to watch after record-setting close yesterday. Right now, the Dow is looking higher, but the S&P can't get to green just yet. We'll keep a look, and we have the key levels to watch. We'll be right back.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live in Chicago, this is Trading 360. I'm Martin Gator. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. We have the key levels to watch here after records yesterday. We had our Fed cut, the third cut this week, and this year we did get our cut. So now, what levels do we need to watch here? Kevin Green is joining us, taking a look at the S&P and more. Good morning, Kevin.
Good morning, Nicole. Yeah, I mean, if you're kind of looking at the price action this morning for the S&P 500, we are being pulled back here a little bit by the technology sector, but the theme still remains that the broadening trade is still intact. We have over 72% of the stocks in the S&P 500 in green so far here, and we are trying to test that 6,900 level. Now, yesterday on the key area of resistance, we closed just 1 point above it. Today, we are pretty much testing it once again, but you're going to see on the screen here that it's actually a smaller area of resistance than what we have seen for pretty much all this week. We're starting to see a lot of institutions rolling up their short call positions higher, which is actually conducive for markets moving higher as well. So the big area of resistance that we're focusing on this morning is 6930. If we're able to get above that 6900 level, if you have any fundamental breakdown, 6850 is going to be your first major area of support here. Let's see if we're going to be able to kind of continue to try to rally higher. I think it's going to be obviously important that technology kind of catches a little bit of a bid here in order to give us a little bit more confidence that we can actually make it a little bit higher here, and we have to kind of have a decent setup for next week. We do have VIX expiration on Wednesday of next week. We have the quarterly expiration as well, so I would expect maybe volatility to re-ramp a little bit higher, but that does not necessarily mean that the markets automatically have to break down there. So interesting start to the day. Let's see how we're going to be able to pay it out.
And it means we could have a really fun, exciting week, too. A lot to watch there. I like that lineup, so thank you for that. What about the materials sector? You want to get a closer look at that, why and what stands out?
Yeah, so materials is actually a very small portion of the S&P 500 when you're looking at its contribution to price action. But if you're kind of looking at the weekly chart, we do have this risk-on type of mentality, the cyclical trade taking place here. And if you're looking at a 3-year weekly chart, you actually do see an inverse head and shoulders pattern here, which we are trying to break out on the weekly chart. Now, this is actually very meaningful because the weekly chart gives you a little bit more confidence that the trend that we are seeing is going to hold. If we are able to break out here with that MACD and a bullish formation, you can actually see material stocks move a lot higher. And this is going to be, obviously, the Sherwin-Williams of the world. You're also looking at a lot of the gold miners, the silver miners, and they have been obviously on a tear here. But there could be more room to run on the materials front. Very small allocation when it comes to the S&P 500. Very easy for institutions to really try to push that sector. So this is one that I have on the radar here for next week.
All right, Kevin Green, great to see you. Thank you so very much. Now it's time for our market meetup panel. We have a mixed market here on this Friday. Joining me right now, Alex Coffey and Jenny Horn. They co-host Next Gen Investing Show here on Schwab.
All right, y'all. Be careful.
Alex, good morning to you. I hadn't seen you
back
yesterday.
a little
Some of
bit.
your thoughts on the market.
Good morning, Nicole. You know, I was hearing Kevin Hanks earlier on the opening bell and as well as the morning movers with Diane, and he was talking about this, fight back of the 493 and this rotation out of the Magnificent Seven. Throw Broadcom in there as well, and I think the market supports that theory. I mean, you see about 70% of the S&P 500 higher so far today, and this has been really the theme of this week's action. You've had equal weight outperformance, you've had some broad market strength, but the AI trade is starting to deflate just a little bit. I mean, this is, in theory, in my mind, the best way for some of these concerns around CapEx and bubble-like stock activity in some of these concentrated names to resolve itself. And so you look at names like NVIDIA, you look at names like Broadcom, they've largely gone sideways, I would say, in recent weeks. And that's a good way for the things to correct, is through time rather than in price. Now, I know Broadcom's down significantly today, but it's had an impressive performance. So, Nicole, this is a long-winded way of saying I'm encouraged by what I see, even if it does mean that we have a little bit of a choppier NASDAQ, a little bit of a choppier S&P 500.
Yeah, and look, Broadcom is, as you know, has been a winner. Jenny and I were talking about that earlier. Oracle, on the other hand, is down 3 months over 30%. So, does that set the tone a little bit about worries in the tech sector? What are some of your takeaways this morning, Jenny?
My takeaways are that for tech earnings this week, I know that we're few and far between. I mean, we have right down 99% of the S&P 500, and I believe we're actually higher than that now, has reported their quarterly earnings, but overwhelmingly so. It has been, I think, better than expected. As we do see analyst estimates right now about a 13.5% earnings per share increase for the third quarter, so that's strong. With that hold, it would mark the fourth straight quarter of double-digit earnings growth, as well as an acceleration from the 12% earnings growth rate that was reported in the second quarter of this year. So expectations were much lower coming into the quarter. Analysts had expected about a 7.9% increase for earnings, and so now sitting at over 13% is, objectively strong. All that being said, this week, the narrative around tech and the overall tone from Oracle as well as Broadcom, while they're late in the earnings reporting cycle, still very important to the overall health of AI. I think that it was all things cost. It does seem like right now CapEx and the overall pressure to build into AI is not necessarily just a boom cycle for your stock anymore. I mean, there's a time you could put up really big CapEx numbers and that was considered a win for your shares. Now it's getting up more scrutiny. You have to be able to monetize these products, and a lot of, I think, focus on Oracle's backlog as well as just its cloud offerings, because it's going to be expensive to build into the world of AI. Broadcom is also showing no objection. I mean, we saw this company was 28% revenue growth. This is really strong, but I think, again, the scrutiny on the expense to build an AI is right now being very much criticized by the street.
All right, and look, we had a 9-3 vote on the Fed cut this week, but there was a lot of, contentious debate. You had Beth Hammack, who really is focused on the credibility of the Fed and talking about her concerns about inflation, and really wants to make sure that inflation is on the way to the Fed's target of 2% and bringing that back down rather than keep cutting. I mean, there are some apprehension, that we're seeing. There is some apprehension that we're seeing. Alex, other thoughts here or anything else?
I love that you brought that up, Nicole, because, outside of Broadcom, which is going to dominate equity headlines today, to me the story is treasuries today. You see a pretty substantial move in a market that's been pretty locked in sort of a pretty tight range over the last couple months. About a 4.5 basis point rally in the 10-year treasury yield today is something of significance, and largely it looks like it's being tied to those comments out of Fed President from Cleveland, Beth Hammack, as you mentioned. So this is the constant kind of cat and mouse game that we see, the back and forth post the Fed meeting. I thought Jerome Powell was more neutral to dovish than I think market expectations were on Wednesday, and now you have more of the hawkish pushback a couple days later. So I wouldn't be surprised if next week we got a little bit more of a neutral dovish tone again, but it's the constant back and forth from the Fed as they try
Tesla's
to
price
steer
action
market
right now.
expectations into the new year.
I'm going to throw in two pieces of news crossing on the wires, one on cannabis and one on NVIDIA. The NVIDIA here from Reuters is that NVIDIA
I ain't gonna lie, but y'all be ready for that, boy.
of the H200 AI chips due to strong demand. We know that now they've gotten the okay to send these over to approved companies in China, even though China has been very crucial and critical, wants to make sure why China companies need that. The other is Tilray and Canopy Growth. Those stocks are surging, according to Barron's, on reports that President Trump will loosen those marijuana
pull it all
restrictions.
back. Who cares?
So take a look at the
We're investing for the long haul anyway.
Alex Coffey,
Sick of
Jenny
it.
Horn, great to see you all week long. Have a great show for Next Gen Investing. I'm Nicole Petalides. Thanks for joining us here on the opening bell every day at 9 a.m. and 2 p.m. here on Schwab Network. I'm happy to be with you. Morning Trade Live with Sam Vadas is next.
Whether you're an experienced investor
Oh, y'all
or
be
just
careful,
getting
y'all.
started, Charles Schwab offers a webcast that's right for you.
You gotta see how much this bounce is.
Platforms
Right
such
now,
as
the trend
webcasts
is
are designed
bearish. I
to
ain't gonna
help
lie to
you
y'all. The
broaden your
trend is gonna be a
knowledge.
little bearish.
Platform features
So
and
we just gotta
resources
see.
available from Schwab.
This is
You'll
not a
learn
trend
tips
reversal
and
yet.
tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, getting traders, and trusted financial journalists. Streaming live.
Schwab Network. 24/7, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. Morning Movers brings traders the biggest headlines to start the day. From volatile overnight sleep to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Man, y'all, hey, it was snowing last night, man. I swear it was the best. Anybody get snow in their city, their state? I need this to break.
S&P 500, remembering that getting up to 6,900 yesterday, down just off that by 0.2% right now, and the Nasdaq as mentioned 0.6% lower, as we are seeing this drag coming from technology, which has been really the theme of the last few sessions. Let's take a look at global markets because we saw a nice follow through from the gains and the records that we hit on Wall Street here yesterday, particularly for the Hang Seng Index, which was really our outperformer there, up almost 2% in trade. The Nikkei 225 stock up in Japan also up 1.4%. The DAX is 3% higher right now. We've got the FTSE just a little bit wobbly right now off the back of the UK GDP figures. We'll get into that, but that is very much building the case for another cut from the BOE come next week. We've got a central bank bonanza for the global economy next week with the ECB and the BOJ as well, so we'll get you across all of that. But let's take a look at futures products as we get up and running for this Friday, because of course we have got the Fed buying treasuries at 10-year yield at 4.19 right now, pay 10% higher. We've got the US dollar index at 98 right now, so that's ticked up a bit off the softness we've seen in recent sessions. Gold catching a bit to the tune of 1.5%, 43.75 right now. Crude oil on the back foot. We continue to track all the global cross currents at $57 a barrel, and Bitcoin catching a bit this morning at levels of 92,000 and change right now. So that's the setup as we look across the major futures products and also global index numbers today as we get up and running for what is another mixed session. So let's get Kevin Green, who joins me now. We've got a lot of macro data to chew on, but we have had a number of Fed speakers hitting the tape this morning, getting thoughts on, how things went down in that FOMC meeting earlier this week. We heard from Schmidt, we heard from Bowlby, and perhaps they see things moving forward, the reasons behind why they suspended as well. Obviously, we saw nice rotation yesterday. We continue to see that today. KG, what stands out to you this Friday?
Well, the rotation trade was actually very strong in the market about 30 minutes ago or so. We were starting to see that trade was only about 50% of the also seeing the S&P 500 futures rate for the most part trading flat to even negative at this point in time. It's a little bit different than what we've seen over the last couple of trading sessions here. So this is a little bit more of a risk-off day. Let's see how much we can actually move to the downside here before buyers start to step in. Volatility's got very cheap.
Everything pulling back right now, y'all.
Which is relatively cheap. Usually, especially this year, once we had 14 days, you don't use this data for too long. Maybe a day, maybe 2 days, and you start seeing it move very higher. So volatility is actually relatively cheap. Technology continues to go ahead. We have raw account earnings. We also have some other technology stocks that we're starting off here today. And once again, that rotation trade a little bit weaker. Maybe volume kicking up here a tad bit over the last, let's say, 5 minutes or so. That's what we're seeing on Asian S&P 500 futures. But overall, it's actually been a decent week. And next week, what we really want to be able to focus on is not only the fundamental trade, but the commentary coming from the Fed. We will see this. They kind of talked about the fact that inflation risk and fears that they have, and what they're hearing from their partners is a little bit more elevated than what the market might be pricing in here, which is why they're a little bit more cautious on cutting rates. But we do have other Fed speakers over the next week or so that give some commentary. And let's see how the yield market actually reacts to kind of look at it today. And we are actually seeing the yields moving back a little bit higher, pretty much staying at the same level than we were at before in the Fed meeting. That's kind of a telltale sign, especially with the dollar kind of weakening over the last 24 hours.
It certainly is. We're at the level of 4.19 right now in the 10-year benchmark, which is certainly interesting, particularly given that, as you point out, it takes us back to sort of the pricing in the market ahead of the rate cut on Wednesday. So, as you say, a little bit more risk-off candidate we're seeing here, as you pointed out too, with the Bowlby. It seems like they're a little bit uncomfortable with the front loading of the rates, but I'm going to be speaking to Ben Emmons all about that in the next block. But, if we just get back to what we're seeing as far as individual stocks, as you mentioned, tech coming off a bit, a nice day for the Dow. You've got components like Nike, ARC, UNH, Disney, Mickey's, etc. As we do see it, sort of, as you say, the rotation continuing, but just not as extreme as we saw yesterday. What do you think as far as volatility is concerned?
Yeah, when you look at the volatility index with the bits here, we're seeing a small re-rating to the upside here, but still at 15.2, so cheap relative to what we see pretty much all year. We're closer to that 2 standard deviation move to the downside in terms of volatility, or just looking at prices. It's probably a little bit too cheap compared to the economic data.
Nice on these puts.
Some employment data coming from ADP, or coming from ADP. We also will have some housing data in the mix. I'm not sure if we're going to get the inflation data. It's on the calendar, but still.
Well, we better not get a bounce right here, bro.
Tentative, so I'm not sure if we're going to get that. And then we'll have some Fed speakers. So I think next week we still probably will have, for the most part, a little bit of a volatile week. We have VIX options expiration on Wednesday, so the last trading day for the VIX will be on Tuesday. Usually vol rates a little bit higher because of that. And then we will have a quarterly expiration on Friday, so a significant amount of notational value rolling off in the market, not only on index options like the SPX or even the ADX.
Alright, so that's why we're pulling back all crazy. Like, the VIX is going crazy, okay? So it's like extra volatility in the market. So. And they was at a high, so everybody's just taking profits. Except for PL. PL probably running like PL going to $20. PL don't care what the market doing.
What's going on in commodities? What's happening with natural gas this morning? I mean, I see that's down with 3%, 5-week low yesterday. It looks like there's some headlines around, potential for some warmer weather here. Certainly not the case in the financial district of New York, but talk us through what you think is price action.
Like, this chart is so bullish, and that pullback don't even make no sense. This is MACD filling up the gas, like, whenever the market is bullish, I'm looking for rare earth to end up around 19. But that's just a guess. Trade what you see. $4 is still a stretch when you're looking at the fundamentals. We still have that inventory buildup that's taking place here in the United States on a relative basis. There's a lot of that weather premium now being pulled back. Now, here's the big thing about natural gas we have to keep on the radar. If we're hovering around this $4 level, let's say for another 2 weeks, 3 weeks or so, you can maintain the liquidity rate back to those $5, even $6 level, because eventually this winter we will have some Arctic blast, we will have some issues in the bottom region, draft, if you will, that could actually just get closed. But you are seeing this kind of unwind and very aggressive trade that really also brought up a lot of the energy stocks as well. You see the other so not surprisingly, you see this $4 level we hit, and I think if you were kind of looking at the same type of trend we have used as far as the weather, it did not make it outside of the realm possibility when we get that $2 that is that. It's giving me unwind as well.
Okay, thanks for rubbing it in, KG. Just before we let you go, what's going on in the metals patch right now? Because obviously we were seeing these 90 days yesterday. We have seen this dollar weakness this week, which perhaps speaks to some of the rally. But even with the debt behind today, we're seeing gold, silver, copper happening a bit. Talk us through that.
Yeah, well, silver actually didn't reverse here. Silver is kind of looking at it. It's become more of a risk-off trade in this market and this rotation trade as well. So we talked about some of that volatility at the close yesterday. You are seeing some significant volume in sell activity in the last couple of at least for yesterday when you're looking at the close. I'm keeping my eye out on platinum and palladium. For platinum, you are seeing it break out of this cup and handle pattern taking place. This is going to be the daily chart here, and you are seeing it move higher, MACD in a bullish formation. We do have a cyclical type of trade taking place, and you do see demand for ICE vehicles, if you will, or combustion vehicles, traditional combustion vehicles. That actually reduces demand for that away from the platinum as well as palladium are going to be utilized. Within that, we are also getting some reports and good see the administration next week, the U.S. administration actually roll back a lot of the initiatives, like the bill right as well. So you are seeing that move aggressively higher. This also kind of matches the increase from the automotive players, GS towards things of that nature. So the industrial trade and the metal trade continues to expand, and now it's more in the industrial front rather than the precious metal front.
Yeah, seeing platinum up over 4.5% right now. Palladium is up about 3% in trade. KG, thanks for getting us across all those moving parts for us this Friday. I'll talk to you a little bit later on in the day. Coming up, we'll start with the next for the Fed. We'll stand in and from Fed what's behind the top of the Wall Street. Believe the Fed should have played this card. All my morning trade right.
I'm Nicole Federlese at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at sheldronfrost.com.
A modern approach to wealth management. No politics, no spin, just the market from Home Depot and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
We're back on Morning Trade Live. Fed has downgraded PayPal neutral with a $66 price target. The firm believes the combination of uneven Q4 transactional volumes and uncertainty around broader platform improvements mean that the stock will remain range-bound in the near term. PayPal shares are down nearly 30% in 2025, but right now they are flat at 61 and change. Let's take a look at your morning winners and losers on the session. We've got Lululemon that is on a tear this morning off the back of its earnings report. It looks pretty good. Obviously, we'll be here into that throughout the course of the program, but we're also looking at some leadership changes at that company too. The aerospace is up at 4.5% right now. Mosaic doing a similar thing, about 3.5% higher. Broadcom is on the way lower off the back of its earnings report. There does seem to be some concerns around the fact that investors wanted more, particularly on the customer friends front, and so there are also some concerns around the margin pressure that they highlighted here for that company as well. We've got the memory names done. Western Digital, Seagate, Micron, all lower between 4 and 6% this morning, so we're going to be tracking that performance as well. But let's just shift from the micro to the macro. Joining us now is Ben Evans, CIO and founder of FedWatch Advisors. Thanks so much for joining me this morning, Ben. It's really nice to see you. Look, let's just get through some of this commentary we've got from some of the successes this morning. Obviously, talking about how optimistic the rates will come down next year, but is that comfortable with the front loading because of high inflation? What do you make of some of the comments this morning? I mean, it's no surprise.
Woo! I had to put my shirt on, or my undershirt on. It's cold in here. Good God. What are y'all doing to the market?
So it's sort of like, I guess they were doing a neutral thing with respect. Stay on hold, after the oil report next week, we believe the oil report because we're all seeing the adoption of the market rate 60K with how we should be indicating. That if that is a weak report, then it's huge expectation.
Yeah, exactly. I mean, so they've put sort of one unit system for next year as far as what they're explaining. What is likely to change between now and then as to, how quickly that could actually come, when we actually get that cut? Could it be as soon as next week's jobs report to confirm that, yes, they perhaps need to do a little bit more, or do you think that they will wait?
So you actually use the job report, the job right, the report says the expectations flip, oxygen generate just a compound period. So when the second shake is, that's the consumer. Recently the data has been indicating that the consumer conditions happening. It's now like that shows that certain jobs are coming. And the September report showed a lot of people get back into the labor force. This report that's interesting to look at too, like, is that sustained that more people coming back in? It means that they're nice about the job market to find work. But it is contrary to the direction that it turns out the
Alright, y'all.
because they were worried about
Coming down.
continuing on the risk rate before, and then bring that forward instead of now June, based upon the project of fallout effect, will then become April or March. That's the dynamic.
I think these are some of the concerns that, the typical things of the world have highlighted. I mean, Schmidt has been out this morning talking about how this is a balanced labour market right now. They are worried about the fact that inflation is too high. Are we entering a 2026 where we're going to see this re-acceleration of growth without a solid jobs market on steady footing? And we then enter a scenario where we see a stagflation-like type of situation?
Don't think this is stagflation, right, to be honest, but the idea that we have GDP growth, but not a lot of job growth, is kind of the trend that started this year, that continues is possible. But it's also remarkable because if GDP is really driven by investment, ultimately that leads to more job growth. These people think that therefore it should lead to job growth. I think it's all still a bit open, and what I'd be looking for is that the trend that started this year with more investment quickly spread. We're seeing more follow-through from that. Particularly as countries and companies that have committed to investing actually go invest. That's the thing we look here. We don't know if the trillions of dollars committed, when that is going to be the economy, we don't even know about how much. But if it does come towards the extent that will be significant, like I said before, it will really lift GDP maybe to 4-5% range.
Yeah, well, it's interesting that you say that on the jobs front as well with the companies that have announced investments. I was talking to somebody last week who seemed to suggest that given their numbers that they're crunching, the Apples, the Intels, the AstraZeneca, which have pledged so much money to obviously manufacturing here.
Come on, y'all.
Job growth or generating job growth that we would like to see. Obviously, we were crunching in a hawkish cutting event on Wednesday. We got a dovish surprise.
I'm trying to see if PL can make it past this 1850 right here.
$40 billion we're starting from today, right? As we speak. With a 10-year yield at 4.19 right now. I mean, how significant is this?
Well, this is significant because if you go to the statement, and there's some section there about frequently asked questions, they actually stated in there to buy up 2 years in maturity if you need it, but the statement, and the second student, whenever they do forward statement, that's a commitment that they made, and not so easy to back away from if they're going to start buying premature. Why does this matter? If you think of the deals, like a lot of people say this is QE, but the deals in the system, and when it's deals or deals, same idea.
Consolidation right there.
Another version of saying, well, if
We
you're
need
going
them to pick a direction.
you do some sort of form of yield curve control idea, meaning back in Australia, where they did that formally, they don't announce it this way, but you do affect expectations of the curve, and it could affect the long-term rate too. So since you're now taking something over here, I think it's more than reacting to the rules from saying rates are going to go down, they tell you more than 2% rate.
Right.
I don't think that the rate cuts are reducing the revenues. Same time, if you're going to buy the rate, you're going to buy more, so keep the rate. You can keep doing it, not just one month, but like 7 or more, and then you can be effective. And that could keep the risk in the middle of the rate.
Okay, all right, looking across the yield curve with the new mini QE. Then as always, a pleasure. Thank you so much for joining me. Have a wonderful weekend. We do get soon. That has been Emmett there, who is the CIO and founder of Championship Finance. Coming up, we will get a closer look at the big picture with the team from Stars Club Morning Trade Live.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
there's not that much bull volume right now.
Same goes for where you invest. Level up and invest smart with Schwab.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall. Live from the floor of the New York Stock Exchange, only on Schwab.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trading Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
The market can't do it. These bulls are taking over. I mean, the bears are taking over. Excuse me. The bears are taking over.
Markets make headlines and traders make decisions. From earnings shocks to
They want to come down lower.
we're tracking the catalysts that
They're going lower.
right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. We're back on Morning Trade Live. Costco modestly lower this morning after meeting first quarter earnings estimates. But here's the info you really want to know. The company set a single-day hold increase that is record on Halloween. Who would have thought it? Showing 358,000 boosters. That's a 31% increase over Halloween 2024. But that's not all. Costco safely sold 4.5 million pies in the 3 days leading up to Thanksgiving. That's more than 7,000 pies per warehouse over the 3-day period. So now with Costco, much like S&P football, it just means more. And in our premium shares breaking down right now, almost 1% lower. Let's take a look at that for the top 3 stock retailers today. And looks like Costco's the only one that's lower today. That's top Walmart, Home Depot, and Target all higher by about a similar amount. So there's a mixed picture of the retail space today on the back of Costco's earnings. Of course, the last one of the 4 to actually report earnings over the last couple of weeks. A lot of attention on the consumer time that needs to currently. Welcome back to Morning Trade Live. It's time now for big pictures. Well, let's welcome in Colin Martin, the head of fixed income research and strategy, Schwab Center for Financial Research. Happy Friday to you, Colin. Don't know if I just made you hungry as well, but the 10-year yield right now at 4.19. It looks like some of the Fed's big debt hit the tape this morning could have something to do with that. Is that what you're reading into it?
Yeah, I think a little bit. We got a little bit of everything with the Fed officials this morning. We got, and as expected, comment continually ascended to kind of know where his views are. We got Philly Fed President Paulson, who will be a voter next year, which is something we're really going to be paying attention to. Clearly, he's outgoing voter and we're incoming voters. And Paulson is relatively new, so he's focusing more on the labor market.
Oh my God!
And then we got some mixed comments.
All right, y'all, be careful. Oh my God!
Because his views were more about in case we saw before the government shutdown and the lack of data that was given conviction to really get on board with the rate cut rate, not kind of under the cloud of uncertainty. I think you need to take all that at face value that there is a lot of uncertainty right now. And when we look ahead to 2026 and we look at that median dot that we get from the various Fed officials, that's a long time away. That's a year-end 2026 estimate, and a lot can change between now and then. So I think we're going to take that wait-and-see approach that Fed Chair Powell hinted at, and as it stands right now, labor market's cooling but not cracking, and inflation is just a little bit too high. That allows them to be a little bit patient. If we see a market deterioration of the labor market, maybe we get something next week with the non-farm payroll report that's a little bit more negative than the market markets are expecting, then we'll probably begin to see pricing in a more aggressive rate cuts. But until then, I think the Fed can take a wait and see approach and see what the incoming data tells them.
Cheers for that, because obviously a lot of the Fed committee is important to get an idea of, the diverging views that we are quite privy with at the moment, but just how they're feeling about things moving into 2026. It does seem that many peers are a bit uncomfortable with the pace, the front loading of the rate cuts that we see. So I suppose that's important, but the job is more on Tuesday. How consequential could this be as to how the market prices in exactly when the potential to get that?
I think it can be consequential, especially if it becomes a little bit easier than expected.
This stock is not falling with the rest of everything else. It's actually holding this. You already doing nothing. PO's in the same spot. SPY Qs and IWM is falling. Tesla's falling. Let me see.
And then even for November, you could argue it's going to be a little bit incomplete because part of the data collection period, the government was still shut down. So it's going to be messy. I think we'll probably see some volatility after the initial release as we look at the headline numbers. But then as the minutes, days, hours go by, we can kind of see what the actual details are. We'll probably get a better look. We're going to be looking at the unemployment rate. And that's something we've been focusing on because even though we've seen a slowdown in non-farm payroll, you could argue that's to be expected as we get this.
Okay, hold on. Hold on. It might be done falling.
Pretty low by historical standards. It wasn't that long ago that many economists would say an unemployment rate around 4.4 or 4.5% is full employment. So if it continues to kind of hover where it is right now, we think that's a good thing. We think that wouldn't necessarily cause the Fed, a 4.5% unemployment rate, to continue with their rate cuts. If it does tick up, that would be a little bit more.
Lord help me.
We're going to be paying attention to that as well.
Okay. The income part of fixed income has been good for investors this year, particularly on the shorter end with those rates coming down and certainly outperforming the longer end of the equation. But I'm just wondering if this is likely to continue and what you're sort of talking about clients and about heading into 2026 as to where some of the other opportunities are.
It was pretty good for most bond investments this year. You got income returns, that's what bonds do. And then you got, for most investments, you got a little bit of price appreciation. So it's good to kind of separate those out when you are investing in bonds. Bonds can be confusing for a lot of people, especially what was short run, what drives returns. You get your income gains, and then you get potential price increases or decreases depending on the direction of yields. So it was a good year this year. Income impacted the total return more than price appreciation did. As we look ahead, we think that trend will likely continue. Income will probably be a smaller portion.
This market is
coming
back,
will probably come down because we have lower yields now than where we were a year ago. In terms of price appreciation, we think most high-quality bonds will continue to see some price appreciation in 2026, mainly because the direction of U.S. high-quality yields appears to be lower given those potential rate cuts. Now, in terms of other parts of the market, not everyone will necessarily get the boost of price appreciation as the Fed cuts come to fruition, especially in the riskier parts of the market. Even if we do continue to see default remain somewhat elevated, we get some sort of credit loss there. That's what we saw this year. We saw auto bonds, bank loans, things like that. Their pricing is a little bit below the higher rate part of the market. We think that will continue next year.
Get out of this.
Okay, Colin, thank you so much. Appreciate it as always. Happy Friday to you. Have a great weekend. I'll speak to you next time. Colin Martin, head of fixed income research and strategy to financial research. Coming up this time of the morning trade, and we'll take a closer look at WarCom, which is moving lower after its earnings report. We'll be back right with you right now.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, staffers content curated to fit your unique goals. You can spend less time searching and more time learning.
Cloud Network delivers real-time market insights, driving Nike, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on cloudnetwork.com.
Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investor webcasters break down different investing styles, including growth, value, income, and more. What's the most? You can account right by tapping the webcast in the future. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and learn how to learn today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Pedalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and markets react in real time, Opening Bell, live with the NYSE, right where it counts.
That's the morning trade line. Let's look at the war talk. The stock is slow this morning after earnings. More of those numbers momentarily. Broadcom has been one of the best among the major chip names in 2025, gains more than 55% this year. It's up more than 150% from April's current low and now has a higher market cap than Meta and Tesla. It is trading down 10% right now off of that big earnings, but that's supposed to more to say Broadcom, putting a number like what was my phone that were unpaid. You and I were breaking down these numbers, and I mean, they look pretty good, but it does look like it has a bit of a rethink that this is some concerns around what was said on the earnings call, and we are looking at a big underperformance in the market today. Just talk us through exactly why things have been coming off in the market today, and obviously why things are reacting.
Good morning, Sam. We covered it yesterday. It appears to be a strong report. It was an upbeat report. The issue really stems from the sales outlook because it didn't meet the lofty expectations because the market itself has been so hot. It came in a little bit under what the street was looking for. So I think that's why we're seeing this move to the downside. It's the biggest intraday drop we've seen in about 8 months right now. Shares down more than 10%. Following what some felt was an unsettling or too cautious commentary from CEO Hassan on the call. It wasn't in the numbers, it was on the call. He said that the company has a backlog of $73 billion in AI product orders that will be shipped out over the next 6 quarters. That number was disappointing to some investors. But he didn't seem to clarify the figure was a, quote, minimum. He said, we do expect much more and more orders to come in for shipment within the next 6 quarters. So the lead time, depending on the particular product it is, can be anywhere from 6 months to a year. Now, as you mentioned, Broadcom has had a really impressive one. The investors were seeing some clarity on when and how the company will get this payoff from AI. Instead, it was a little bit more vague than I think the street was looking for. They didn't get the AI revenue forecast for 2026. There are some big concerns about trading profit margins. Hassan did disclose the company received an $11 million order from Anthropic in the 4th quarter, but he warned that their margins might narrow because of AI product sales. They also held off on giving an annual AI revenue forecast because Hassan referred to it as, quote, a moving target, saying it's hard for me to pinpoint what 26 is going to look like precisely, so I'd rather not give you guys any guidance. But we've seen that this whole earnings quarter really is a guidance story, so in the absence of that, I think that's why we're seeing the down move. But like you mentioned, a strong quarter for the fiscal 4th quarter. Sales came in at $18 billion. That was better than expected. Earnings rose to $1.95 a share. That beat expectations for $1.87. Also, fiscal 1st quarter sales came in better than what was estimated as well. They also boosted their quarterly dividend by 10% to 65 cents a share. So a good quarter. But just some of the vague language and the ambiguity about the AI revenue specific numbers and the backlog. But with this downward move in play, analysts feel really strongly about it. The analyst community has come out, price target up at Mizuho, 450 to 435. Piper Sandler raising theirs to 430 from 375, saying that the company continues to be on a roll. They said that it is meeting expectations. They're seeing into the AI business. They also think that the January 2026 quarter will be up roughly 100% year over year in terms of its AI business. They remain a buyer of Broadcom, especially on weakness. JP Morgan raising their target to 475. Bernstein raising theirs to 475 also, saying that they see the AI stock continue, but they don't think that there's anything else the story could have done other than over-deliver at an accelerating rate. So they still feel very bullish. CFA raising their price target to $500. Broadcom, Barclays putting theirs up to $500, and KeyBank also coming up to $500. So while we are seeing a downward move in the day post-earnings, the analyst community still feels this is a bullish case for Broadcom, Sam.
Yeah, it was interesting. I had an analyst on yesterday.
Damn, Broadcom, breaking the market down with that bullshit. Broadcom is breaking the market down, bro. It is going down like, what is that, like 50 points?
There's just no room for that as far as investors are concerned. So,
You know, what are you doing? Keep going down forever. Look at this, like, liquidation, like, it's almost 100 points, bro.
Yeah, I think, as Marley pointed out, the metrics were very positive, but overall, you're going to see some of these names that just don't come in above the expectations are being punished, and Broadcom being one of them. I think it sets up for a trade example here today to have the opportunity to play for a range or capture a range to the downside, but also have the opportunity to put in stock. So I'm looking at a trade example today to buy the January 370, 350 put, 1x2. You're buying 1 370 put, sorry, 2 350 puts. You can put that on for a credit right now, so you get actually paid to put that position on. It gives you a capture range between where it's currently trading, since it's trading below 370 now, down
Okay,
to
swap
a
chain,
around 326. So get big range to the downside. And if you trade below 350 at expiration, you have the opportunity to put in the stock somewhere around 356 right now. So again, I think there's an opportunity here to capture a range to the downside as we do see some weakness. And if we see continued weakness over the month of January, then the opportunity to put in the stock at a better level.
Okay, good stuff. Quick example trade for us on the back of these Broadcom earnings. We are trading down at 10% right now, 365 and change. Dan, always appreciate your insight. Thank you so much for that. Happy Friday. Have a great weekend. Dan Dillingham, Managing Partner, KK International. Coming up, we will take a closer look at the sectors on the move this morning and what stands out in global markets. Morning trade market. We'll be right back.
There is no volume going up. No volume going up, boy.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day, 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Gaden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage
continue to see this rotation? What stands out to you?
Yeah, good morning, Sam. As you say, a lot of the same, but maybe the tech-heavy NASDAQ stocks are winning the tug of war a bit more today. Now, just in the last 10 minutes or so, things have improved subtly. We're closer to 50-50 in terms of advanced declines just a moment ago. That is closer to 55-45 in favor of stocks higher on the section now in real time. When we look at sectors, however, you actually have 6 of the 11 sectors that are green, and 5 of them that are lower on the section. Unfortunately, 3 of those 5 are arguably the 3 most important in consumer discretionary, communication services, and information technology sectors, Sam.
And just as we look across the technology space, the next 7 as well, and the sort of impact we're seeing from the likes of Oracle, obviously that was really the story for us yesterday. Like Broadcom, a bit of a
I don't trust nothing on the call side today.
Concerns that it's raising around the customers, the margin story as well. What stands out to you about the next 7? Because it is interesting, we've got Apple higher, Tesla higher, and that is despite the fact that we're seeing some reports around Tesla actually seeing sales coming in at a near 4-year low. What do you make of the performance we're seeing in some of the bigger companies today?
Yeah, like we did yesterday, taking a look at the information technology sector, what stands out to me is how dramatically different the performance is amongst these names than it is for the overall market. We just talked about for the overall market, S&P 500, which includes these stocks, it's about a 55-45 advanced decline. If you were to look at that in real time for the S&P 500 information technology sector, only about 25% of these components are higher. So that means basically for every one that's higher, 3 are lower on the section. You see that reflected by the picture on our screen. There's just a ton of red on today's price action, and some of those colors are quite bright. You guys spent the last segment talking about Broadcom. There's no doubt about it. Broadcom is the story of the day, and it's pulling down many of its big tech peers alongside it.
Pulling down the memory names. I don't know if that's related or something else. I mean, I've seen that Micron's actually got a price target that moves from Steeple, but we're seeing SanDisk, Western Digital, all lower the biggest flaggers on the S&P 500. So that's obviously something we're watching as well. Thanks very much for that, Alex. Really appreciate your insights on what's driving these markets. Some of the action we're seeing beneath the surface today. Let's right now go down and take a look at global markets. We're getting a lift from Wall Street's record day yesterday. Asian stocks rallied. The Hang Seng Index leading the region higher. The Nikkei 225 and the Kospi both up over 1.3%. Europe also tracking the gains there too, although chip-related names like ASML remains under pressure. In international tech news, China is reportedly now weighing a package of incentives worth up to $70 billion to back its domestic chip industry as it continues to force state capital into getting ahead of the US. SoftBank is reportedly studying potential acquisitions, including US data center operator Switch as part of Masayoshi Son's AI expansion plans. The two companies are said to have held talks at a time when Switch is planning to go public as soon as next year. On the macro front, the UK economy surprisingly shrank last quarter. GDP contracted 0.5% from August to October, more than expected as services and construction weighed. Sterling slipping this morning against the greenback. The numbers help build the case for a rate cut from the Bank of England next week. The central bank bonanza will also be decisions from the ECB and the BOJ. All right, well, coming up, it is time for Inside Out. We'll take a closer look at Lululemon and bring you an example trade for that name, which is rallying today. Morning trade night.
Hey, investors, you know the market moves. Schwab is here to help you do the big. So, whether you're buying, selling, holding, planning, whether you're ETF, 401k, saving, spending, or you're retiring, you can count on Schwab for market insights, live report, knowledge trading platforms, 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Tom.
And I'm Jenny Moore. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
For tech and energy, crypto season 2, where we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by applying directly to your institution. If you want to learn it as including live, real-time, head to schwab.com/webcast. Start learning today.
Welcome to Schwab Network. Real-time market coverage, expert strategy.
From the opening bells to the closing
Bell, we want you covered. Inside the minds of pro traders.
But what is it they're getting? A higher rate of change in sales based on their guidance, but not seeing a rate of change in WDF.
The biggest headlines, live analysis, breaking news, and sharp trade ideas, minute by minute.
The show's interactive. We'll break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk defined way you're going in earnings.
So that would be a further downside area to watch.
It is high. And say, benchmark prices, and really high.
Schwab Network, streaming 24/7, constantly, anywhere. Wait, SchwabNetwork.com.
Back on Morning Trade Live. Here's a look at how some of these top research names trade today after Lululemon reported earnings and announced that CEO Tom McDonald is departing in January. We have Lululemon among one of the best performers on the sector today, where confidence is high now, but still a comfortable 9% rally there. The data's outdoor is also higher, but the rest are lower. So it's a mixed performance across some of those retailers. Let's go inside out on Lululemon after these earnings. A pretty good report from this company. Joining us now is Guy Canada, who is the principal analyst at eMarket. Thanks so much, guys, for joining me this morning. So what exactly was it in this report card? What the company has to say, which is behind the 10% value it's being reported?
I think it's really coming down to the CEO transition announcement. Lululemon has been stagnant for some time, and I think it's an acknowledgement that what McDonald was doing wasn't working. They have talked a lot about units over the past several quarters going back to 2024, so there's really nothing new about that. But they haven't realized that and been able to bring those stores in a way that can resonate with the customers in the U.S. That's really their core market.
I mean, it's a very different quarter, particularly when you look at the language that they reported 3 months ago. I mean, they were talking about how they were pressured by tariffs, pressured by consumers. They knew that they'd lost their edge. They talked about being too predictable. They talked about being stale. So it's been an interesting reaction as far as investors' response to the expected leadership changes. But how can the market be so certain? Do they have some sort of idea of, who's going to come in next and, how confident can they be in such a turnaround, or is it just the fact that at least this CEO, which has seen performance like this in Lulu, is on the account?
They don't have a set CEO in mind. I imagine that given the timeline for the transition, they would be engaging in a search. And I think they really need to look for a CEO who can reimagine what the brand represents and how it shapes and participates in culture. They really need to respond more quickly to trends in the market and they need someone who can bring in a fresh dose of creative talent as well. I think we can look at what Richard Dixon has been doing at the Gap with Zach Poston as creative director, and that's really been working to bring back the brand heat. That's something that Lululemon has lost over the last couple of years.
Okay. It's interesting because, I was speaking to some analysts throughout the course of the quarter about, this potential for a comeback, and there seems to be some conviction in this outgoing CEO, but look, let's see who comes in next and whether we can sort of see a turnaround story. Let's go back to the numbers now, guys. Just wondering, it's interesting because there's still sort of pressure when it came to revenues. I mean, particularly comp sales here in the US. It was just this amazing performance that we've seen in international markets that managed to offset the softness here. So, what do you make of that?
That just points to the real challenge with the U.S. consumer. During Donald's tenure, he managed to triple Lululemon sales, and a lot of that has come from expanding the customer base in the U.S. beyond the millennial consumer to Gen Z, even Gen Alpha and Tweens really sought this brand out. And those customers have now moved on to other styles, other silhouettes, away from the fitted Lululemon look, and to other brands as well when they are looking for something fitted like Alo Yoga, Ori. And so the black leggings is really their staple. They need to move well beyond
looks like it's going to come down lower.
styles that can appeal to these consumers and bring them back.
Okay, a bit of a newness, innovation, perhaps is something that some of those consumers are looking for at the moment. So that's been an absolute pleasure. Thanks for breaking down that news report for us and the reaction to today's bank analysis with Crystal Analyst over at Appreciate it. Let's trade it now with George Simmons this morning, senior markets correspondent. An example trade for us this morning for Lululemon. George, good morning.
Yeah, good morning, Sam. Well, what I'm going to do is I'm going to trade what's going on with price action today. Obviously, Lululemon's having a great day so far. It's actually come off the high, so that's meaningful as well. But in the context of the trend, the intermediate trend is still to the downside because the stock is trading below the 200-day moving average. It certainly can continue higher to that level, at least in the near term. But at the same time, with that level of the stock trading below that level, we can certainly see a gap fill reversal or retracement back to essentially some levels we saw earlier this month, back to December 5th, but also corresponding to levels on the chart at that 192.50 area that go back to September of this year, where they reported their most recent last quarter's earnings. So with that said, it can go in either direction, so I'm going to play this as a continuation trade up to that 200 moving average, or like I said, a potential gap fill back to the 192.50. So I'm going to go to January, and I'm going to structure a put spread, and it's about 36 days to expiration. I'm going to sell the 195 put, and then I'm going to buy the 185 put below that. And altogether, you can earn about $3 a share of credit or $3 a contract in this position. So the whole premise behind the trade is for the stock to hold, at the very least, the 195 level. And if it does breach that or below that, 192 is your break even. Again, that's right below that 192.50 gap fill that the stock could certainly retrace back to. But at the same time, if the stock continues higher, that $3 premium will roll to zero. That's the objective as well. Now, just in case it falls below that 192 break even, you also have to consider the risks, which is $7 a share, or $700 a contract. That only correct the stock gets 185 or lower by expiration. So, it's a tough position because, again, the stock is trading off the highs of early today, still below the 200-day moving average. But again, the stock could go in either direction. I can't say which way, but we have to play some positioning on both sides.
All right, a good example trade there for us on Lululemon today. Shares up about 10% in trade off the back of this earnings report. Leadership change as well. 203 in change right now. Thanks so much for that, George Sills. I'll take with you a little bit later. Let's continue with these markets right now, because we've seen a little bit of mixed picture across the major indices. We have actually seen the Dow now dipping into the ranges briefly, so we've got technology under pressure today. It is a little bit of a more risk-off day than we've seen yesterday, and the Nifty is record. So we have unlocked the S&P 500 about 8 of 1%. So we still see some protection beneath the surface, but an earnings-driven day, not a lot of macro data to work with, but of course we are tracking these lines coming from various Fed speakers as well. Goldstein, Schmidt, and the centers. We'll be breaking down the rest of that throughout the course today. I'll see you on MOC later on, but thanks for joining us here on Morning Trade Live. I'm Sam Barnett, South of the Schwab Network app. available in the App Store, streaming 24/7 on ShopNetwork.com. We've got Trading 360 coming up next week while we're headed. Have a great rest of your trading day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage is expert strategy. Get inside the minds of pro traders.
What is it they're getting? A higher rate of change in sales based on their guidance, but not the same rate of change in WPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. The show's built for action. We break it all down in real time. With speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going in earnings. So that would be a further downside area for the market.
Schwab Network, streaming 24/7, any screen, anywhere, straight to SchwabNetwork.com.
2025 has investors on their toes. Now get ready for the road ahead. Join Schwab Network on December 11th. 2026 Market Outlook. Your guide to the today's stocks, global markets, inflation, rates, and more. Hear from experts on where markets may be headed, spot opportunities, and see what can drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Steph Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Shares are falling even after the company beat analyst expectations on the top and bottom line. We'll discuss what this could mean for the AI boom in our 60 round. But before we get to all of that, let's take a look at how the markets are shaping up. So we are well into the trading day on this Friday morning. The S&P 500 trading down 1% right now at 68.2790. On the Nasdaq, we are about 1.8% lower, 25,227.48. The Dow also lower about 1/3%, 48,543. And the Russell 2000 trading down 0.9% at 25,6738. On the 10-year, we are higher today up to 419. That's up almost 9 tenths. The dollar at 98.06 today exchange. Gold is up 1/3%, 43,590. Crude oil is falling today down 0.5% to $7.28 a barrel. And Bitcoin still managing to hang on to that number threshold, but just barely down about 2% at $98,100 right now for Bitcoin. I want to take a look at one of the top moving stocks today. One of the big stories we're talking about, joining us right now, Alex Coffey, our senior equities contributor here on Schwab Network, to talk about Costco after their earnings. See, Costco hit a new 52-week low. You walk us through the report and why we're seeing this reaction.
Yeah, Costco under a little bit of pressure here today alongside the overall market, down about 1.6% on my last check. Marley, first quarter results from the company, largely better than expected, but again, this company, even with its pullback, has carried a premium valuation. Revenue up about 8.3% year over year to $67.3 billion. That was ahead of the estimate just slightly. We were breaking this down to net sales, just shy of $66 billion, about an 8.2% year over year gain, which is again ahead of estimates just slightly. Membership fees up 14% though year over year, driving some of the outsized revenue growth. Earnings per share, $4.50 was better than last year's $4.04 by quite the margin, and the estimated $4.28 that I saw in terms of where the street was. So beat expectations, quite a bit of growth year over year. On a comp sales base, whether you include gas and currency fluctuations or you take them out, beats across the board, not only here in the U.S., where comp sales were 5.9%, but also in Canada. In Canada, 6.5% was better than the expected, and international 8.8%. The company plans to open 30 new stores over the next 3 years, and they're increasing their real estate team to support that operation. When you look at this situation, Marley, one thing that stuck out, Vital Knowledge pointing out that the solid EPS represents higher membership fees and a 16-cent tax tailwind. So something to think about. Maybe that's partially why the street not reacting quite as favorably as maybe the numbers would have suggested.
And we talked a lot about tariffs when it comes to Costco, particularly because they have this lawsuit where they've sued to ensure that they get reimbursed for any levies they've already paid if the tariffs are struck down. Was there any commentary about tariffs or the lawsuit or even how they're impacting sales during the holiday season?
Yeah, it's a situation that they're still ongoing, and there's obviously stuff that's going to take place in the Supreme Court that's going to ultimately determine that. One thing that did stick out to me that I think ties more to the investing nature of this and maybe less about the tariffs that I think is worth noting, though, Marley. Truist analysts coming out, they have a hold in a price target of 1,033. Point out that the trends in this first quarter are very similar to the trends of the fourth quarter in terms of steady, continual share gains. But they talk about how they had downgraded the stock last fall, largely because it's just an expensive stock for what it does. But they think that they're slowly but surely growing into that valuation. So some of this pullback at some point might make this an attractive buy.
And Oppenheimer sort of echoed a similar thing in what I saw, saying that even though the results were generally in line with expectations, doesn't mean investors should be disappointed. But, you know, team shares down about 1.5%. Thanks to Alex Coffey for breaking that down for us on Costco. And I'm going to welcome in our next guest, though, broaden out our conversation here. Joining us now, Chris Vermeil, the founder and chief investment officer at the Technical Traders. Chris, thank you for being with us today. You know, I've, of course, focused on Broadcom's earnings. We had Oracle pulling down the markets yesterday. You know, with these big AI names seeing these massive double-digit drops, you know, can we sustain this rally, or do we need to be concerned about the AI tech trade?
Yeah, that's a good question, Marley. The Magnificent Seven definitely aren't that magnificent anymore in terms of the price action. If you were to look at them as a basket as a whole, they have been struggling for the last couple of months, and we've got some stocks hitting all-time highs like Apple. We've got Nvidia, which is struggling. You know, we got Oracle and Broadcom coming out warning that, hey, the AI momentum might be stalling here, and if the Magnificent Seven isn't going to go a whole lot higher, or higher at all, in fact, that is going to definitely hold the stock market down, because the majority of stocks, they're not really all hitting all-time highs for the stock market. The Magnificent Seven has definitely dragged the whole indice up because of the weighting, but we are definitely seeing a rotation kind of away from the Magnificent Seven. They've lost their shine, and money's now starting to rotate into small caps and micro caps, like the Russell 2000 or the micro cap stocks themselves. So people want to take risk right now, but not so much in the big Magnificent Seven.
So as we see that rotation into the small and into the micro caps away from the Mag 7, do you think it's sustainable, or is this just a seasonal blip we're seeing?
I think it's a calendar, kind of a seasonal thing. I think we're going into that kind of Santa Claus rally. Momentum is definitely moving into the risk-on stocks. We are seeing a very diverse mix here. We used to see money just going to the Magnificent Seven, but now we've got the precious metal space coming to life. We've got the micro caps and the small caps, which are usually very volatile. And people are in that holiday season. They get bullish. They get excited about the markets. We are in an uptrend still. And so people are moving into those aggressive stocks. So I do think it's just a momentum, a bit of a sentiment shift. People generally are feeling good for equities into the end of the year and they're buying it. To me, it's a little bit of a contrarian indicator. Generally, just as the small and micro caps come to life, usually we tend to see the overall broad market actually shows signs of weakness, which is what we're seeing. The Magnificent Seven, the NASDAQ, the S&P 500, they are showing some signs of weakness, but money's still kind of rotating into those growth stocks and individual sectors right now for the holiday rally.
All right, you mentioned metals there, so I do want to talk about this. We saw gold hit a 7-week high this morning, silver hitting another record high. You know, as we look at that, I know you have some ambitious targets for both metals, so I want to talk about it. But also, you just mentioned some warning signs. Do you also consider the metals trade and the performance we're seeing in metals as a potential warning sign as well?
I do. I think it's a very big warning sign. Gold, when it dramatically outperforms and the stock market in general for an extended period of time, which is very similar to the price action over the past couple of years of what happened just before the 2008 financial crisis, 2000 market top there. So we have the same scenario. When everybody moves into precious metals, it means people don't trust systems, they don't trust governments, they're worried about currencies, the economy weakening. It's a global barometer saying that something big and bad is probably brewing. And so, you know, right now money's been flowing into the precious metal space. I still see about a 15% move up in gold over the next potentially month or two. I think we can see gold rally to about $5,175. I think silver has a big move up to about $68 and potentially go up to around $82 a share. So there's some really good moves here. Now, I do think they are going to be explosive. They're going to happen soon, but after that, I don't know if you're going to want to hold them because typically if the stock market does start to stall out, then we could see the precious metals pull back. So I think there's a great trade here in the precious metal space going forward.
All right, you mentioned GLD. You see them having a 15% upside. I want to talk about last time you were here, we talked about GLTR, which is the precious metals basket ETF. You called for a pretty significant rally there, and it has rallied. So, you know, let's talk about some of those plays. We'll talk about copper miners. Also, I'm not quite sure, I think you called for 17%. It's up more than 11% right now. You know, as far as those metal plays, are they still in place here as we wait to potentially hit this peak, or would you be exiting those positions as well?
I think when we hit the peak, you're going to want to exit pretty much all precious metals. We're in a sweet spot right now for the precious metal space, the whole complex. If it's a company that has the word mining in it, it's been doing well. If it is any type of metal, whether it's copper or silver or platinum or palladium, then you really need to be holding them. And GLTR, which is the one I talked about before, it's up about 12% from the last time we spoke. That's a basket. That's gold, silver, platinum, and palladium. It's a really nice, easy way to take advantage of the whole complex. And you don't have to try and cherry pick. I think GLD, which is a gold ETF, I think it's got to go to 15% move to the upside, which probably means copper, the COPEX ETF, the copper miners, and the GLTR are also going to continue to move higher.
All right, you've got another new trade that you're watching. You're talking about home builders. You're looking at XHB here. You know, what sort of move are you expecting in this space?
Yeah, it's kind of similar to the small and micro cap play where people are just feeling really good. They're in the buying mentality. Typically, when people get a little nervous, they're not sure where to put their money, they usually move into sectors that they understand. Everybody's got a little bit of real estate, and when people are confused, a lot of times we see the real estate or home builder space move up, and home builders have a very strong chart pattern. They look like it's going to rally about 6%. It's not huge, but 6% into the end of the year, that's not a bad return for a couple of weeks. So I like that play. It's just a pure get in, catch the move based on technical analysis. That's where the momentum is telling us it should run to about $115.75 for XHB, and then you really just need to step aside. It's a very short-term technical trade.
And so if it's a short-term technical trade alongside the metals, when is the exit here? Do we exit just at the end of the year, the rally is over? Do you wait into the first couple weeks of the year?
Well, the way I do technicals and manage positions is I don't try to pick tops or bottoms. I identify a trend. If the trend is strong enough, we hop on and we trade it, and we have our targets, but we won't exit that trade until we actually have the trend turn around. So we're never going to be able to just exit at the top. We wait for price to roll over and for the charts to say, okay, you know what, this has lost its momentum, it's now heading lower, let's move aside, and we lock in the gains from there. We will scale out and hit targets, reduce our exposure, but you really have to let price tell you what to do. So many people try to predict what's going to happen. I don't do that because it's almost impossible. You're better to just follow the market. So being able to identify trends when they start, when they're ending, that is the key to know when to move in, when to move out, and how to manage positions.
All right, Chris, so if all of this plays out and your economic thesis plays out for 2026, what does the market look like? Are we talking about a mild slowdown here, or are we talking about something potentially more severe?
I think we're going to see something pretty severe. I mean, there's the Samuel Bender cycle, which goes back to 1875, and it is actually showing that 2026 is going to be another massive cycle top. It also called the 2000 tech bubble top, the 2007 market top. It's in line. What's interesting is all of my analysis and my stage and cycle analysis that I apply, this coincides with it, meaning precious metals are probably going to have one more big push. I think silver could rally potentially 50 to 60% still. Same with platinum and palladium from this point. We're going to see precious metals take off, and I think we're going to see the stock market actually put a big major top in the coming year. And there's going to be a lot of weakness. And I think money's going to come out of equities, and it's going to look for a return on capital, so it's going to go to whatever is outperforming. And that's going to really push metals. So I think there's going to be a very big correction, bigger than 20%. In 2026 for equities, and I think the precious metal space are going to early on benefit from that. As money comes out of stocks, it's going to dump into the precious metals block.
Well, Chris, we appreciate you being with us, and for that insight, Chris Vermeil, the founder, Chief Investment Officer at the Tactical Traders, and we've got plenty more to come for you on Trading 360. Next, of course, we've got the big three. We've got 3 charts and 3 trades and 3 stocks. We've picked 3 Rick Cat will take us through the technicals for next week's earnings plays: Micron, Darden Restaurants, and Nike. That's next on Trading 360 on Schwab Network.
Well, let it bleed, man. Dang. I think Meta actually go lower too.
This is Opening Bell with
This is a lot. A lot of these stocks, you know,
Stock Exchange, the countdown.
maybe they were just overvalued.
That make markets move. Minute by minute breakdown.
A lot of these stocks have to be overvalued.
Earnings, global movers, just the trades.
Everybody except for Google fine, but everybody else is overvalued.
Opening Bell live at
Damn.
ISC, right where it counts.
Believe me, when it comes to investing,
Y'all overvalued.
Carl's way. Take a left here, please. But there's a Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management. Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks for you and 3 charts. Rick Ducat will take us through the charts of some of next week's big earnings names. So, Rick, our first one is Micron. They'll report Wednesday after the close. Of course, on the heels of Broadcom and Oracle's earnings, this continuation talk about the AI bubble and the AI trade falling off continues. An interesting setup for Micron as we take a look at them. So as we look at their chart, in advance of their earnings, I am obviously seeing a big steep upward trajectory here, but what does the setup look like going into Wednesday, especially knowing that we've seen two big tech names beaten down?
Yes, if you were hoping for Broadcom to ride to the rescue and save a floundering tech sector right now, it didn't pan out here. Micron is a very interesting example, though, because it's not really as much of an AI trade. It's storage. That's the kind of chips they make, is memory, data storage. Those are things that probably everyone needs still. I mean, so it's a little bit of a different beast here. And you can see the chart has held up quite a bit better than many of its other peers here. We are falling off a little bit during the past couple sessions here, but we have our trend line still in play, our white line here, starting with this low point connecting here. And then you could also draw a steeper trend line with our blue line here, connecting the same low point that we established here with the subsequent lows. So by that measure, we are breaking downward a bit, and we also broke through, what we saw here. It was an old resistance level. This is where things topped out for the most part here in terms of where we saw a lot of closes and intraday highs. We did break above that point. 264.75 is where we hit our intraday highs. Now we have kind of dipped below that point. We filled this very small gap right here as well. So if we were to think about our moving averages that we follow, we can see that our yellow 21-day exponential moving average, our 1 month EMA, that's about where we hit our low point today so far. So traders may be looking for this to remain supportive here. That comes in right around 238. Meanwhile, our 63-day EMA in orange, that comes in here near about 210.41. So for the most part, our moving averages do still seem to be diverging farther apart from each other. If they start contracting and the distance between them starts to lessen, that could be an early sign of a potential trend change here. That's one of the main goals of technical analysis, is to identify the trend change as early as possible and make sure it's not a false signal or a false breakout or something like that here. So you want to be as early as possible when you're sure it's changing here. So that's one thing you could try to look for. We can also see RSI, kind of a curious situation here of bearish divergence mixed with repeated entries into that overbought area. So that can be a very challenging situation for newer traders to make sense of here, because even though we have strong price activity to the upside, the pace of the gains is starting to moderate a little bit here as we're at these highs. So for now, we do still remain above that 50 midline here. We're also still below our trend line though. So if we do start to break down, a push below the 50 midline would be noteworthy and could be another potential trend shift indicator here. When we look at our volume profile study, we can see that the nearest volume node lines up with our 21-day EMA there, so some extra emphasis on that as a supportive level. We can also see here our +1 standard deviation channel, which is 1 standard deviation up from our teal linear regression line there. That comes in at 255.50. That could be a shorter term upside area to watch for potential resistance.
Right now at 242, but just to highlight how impressive that steep move to the upside we've seen so far this year is, it's 188%, a little bit more than 188% for Micron. But a very interesting setup going into their earnings with some of these big tech names really under heavy pressure here. But now we're going to pivot to a completely different space, one that's been relatively under pressure in this sort of casual dining segment with Darden restaurants. They'll come out Thursday morning. You can see some of the choppiness here in Darden's chart. They've got some gaps in place here. What's their setup look like as they come into their report?
Yeah, gaps indeed. One of these charts where there's kind of two very distinct phases here, punctuated by earnings. I mean, you can see very obviously this was where earnings came in and did not go the way the bulls would have hoped for. Still, though, we do have some horizontal lines that remain relevant. 195 back here was a couple of our relative low points here. That's about where the high came after the gap down. That's about where we topped out a second time. You can often see that old support becomes new resistance and vice versa. Certainly it doesn't mean this is an impenetrable wall that price is going to stop at if it reaches it again. Rather, we're trying to look for inflection points here where we have a chance of a breakout occurring at that level here. That would be the notable level that could trigger a cascade of orders that results in this energetic push to the upside here, or to the downside if we were looking at support. Similarly, the 180 level here, our green line, if you were to backtrack all the way over here, you can see a repeated low area once again at that 180, 181 level or so. It was our breakdown point here. It was about when we hit some resistance once again after things started to stabilize. So now we've got kind of this V-shaped price activity here. Our blue trend line has been broken. We're within the boundaries of this white, shorter-term channel here. What you could do, draw a trend line going across those lows, duplicate it, put it across the high point here. It gives you one area you can consider looking for resistance here. Again, it's not a guarantee it's going to stop there, but you could say, looking at this, well, maybe once we hit around that 190 level, 180, 89, 190, you might see resistance come up. That's something to consider. So when we do look at our moving averages as well, we have crossed above our yellow 21-day and held on above it. Today, we are crossing above the orange 63-day EMA. Not really early, progress here backing off a bit from those highs. But 183.84 is where that particular indicator comes in. We also have our long-term purple 252-day exponential moving average, roughly in line with our upper boundary of our channel there. So 189, 190, 191 is that general area. Gives us even more of a resistance area to consider here based on that. RSI trending upwards still. You can see that our green trend line is still in place. Our blue trend line for price matches the breaking of our red trend line here. Kind of the opposite situation for our last chart here. Repeated interest in the oversold area, the threshold below 30, typically a sign of weakness in a trending market. Indeed, it did play out to the downside here, but for now, 169 seems to be the low point we've established here as a foothold for the bulls. When we finally look at our volume profiles, the heaviest trading area comes in at 188.24. So this would be the congestion area that the bulls would need to break through on the road to retesting that 190 area here, and then just above 195 matches up with our key linear regression line and another volume node. So there's potential hurdles here that the bulls would need to overcome. Meanwhile, to the downside, a very small node comes in right here. You can see that spike that's right around that.
They run out of something, they go over and grab it.
Right on that right now, 184.32. But you mentioned this is very mixed stock in terms of analyst coverage. We've got bullish calls from JP Morgan, BofA, Truist, Morgan Stanley, Evercore ISI, Barclays, bearish calls, TD Cowen, Baird, Raymond James, KeyBank, flagging the higher food costs, smaller portion offerings. So will be a very interesting report to cover. The average price target right now is about $220, so still showing some upside from where we're trading for Dark Restaurant in advance of their earnings report. Our last one is Nike. Analysts looking for just more commentary on anything around their turnaround plan and how effective it has been. Expectations right now for EPS to decline about more than 15%, and a drop in revenue also about 1.5%. So if you look at the technicals for Nike, what does the setup look like?
In methodology, Nike was the path of victory. They got us here. And they could use some optional differences. This has been a pretty low chart. I'm thinking the apparel sector has really had some challenges from the tariff news that we've seen here. A lot of tariffs affect the places that make the apparel. So it's a difficult situation. It's a difficult environment. And we can see, indeed, right here was our tariff news shot back here. We established a kind of a high point there in our lighter green line near 59. We did not test it again during our most recent decline here. That was where we had about 60 was our low point here. 59 to 60, that stands out as a potential supportive zone. Sometimes it's not just one clearly defined line. Sometimes it's a general area you'd be looking for, maybe price to rebound in this case. These things are not completely cut and dry. If you're looking for price to start down where you think it should, you're probably going to be disappointed very often. So when we also look here, falling wedge type shape between our two blue lines converging toward each other, that's where we bottomed out. Then that gives us our new channel to consider. Just like our last chart, you can draw going along these low points here, duplicate it, put it where the high point was previously. Looks like that's about where we are today. So that area here near about 69 or so could be important to watch going forward here. But we're off significantly from those highs that we saw. We're down from the opening. Not the most encouraging setup here, but we still have earnings on the horizon here, which could change things significantly. Here we have our moving averages fairly close together, 65 to 66.50 or so, as well as 66, our green line that represents this whole high point here. So we broke out above there. Now we'll see if that area becomes support. Once again, same concept I was discussing earlier here. If we were to move a little higher, 70, a high point right here, our red line, that's our relative highs. That would be the point the bulls would want to clear. RSI, longer term downtrend has been broken, so some improvement there. We are above the 50 midline. We're making new relative highs. So by that measure, that's a better sign as well. But RSI,
they might give me the bars on top out of the views.
Here. So that could be perhaps a little
like weird positions too.
Risk situation coming up. Now, when we look at volume profile, we can see our point of control, our thick red line there comes in near 62.29. So that's the heavy trading area that could be supportive here. We also have another fairly large node in a narrow range right about here near 65. That lines up with our yellow 21-day EMA as well. So that would be perhaps another point traders may be looking out for to the downside. Most of the volume all the way up here, though, we can see that was around 71 or so, 75. That's where a lot of the heavy activity was, so that could be a notable upside boundary as well.
All right, Nike has an interesting setup coming in. You can see how low it fell on the tariff news. You can see there in April, those bottoms on the chart there. Has really recovered, though, the last 6 months, up 7.5%. But as we look year to date, that drag really did pull them there down almost 11%. But we did just get Lulu's earnings, and they are seeing a really nice uptick here. They're up more than 10% so far this morning, up about 10.5%. Also in the midst of their own sort of turnaround plan and reformulating their process. So another interesting setup there. But Rick, thank you for breaking down some of our big earnings reports that we have coming out next week. That's Rick Cat, our lead market technician here on Schwab Network. Coming up next, we are going to spotlight Serve Robotics and take a look at how they've been growing its sidewalk fleet of delivery robots into the largest in the United States. That's next.
Sometimes, you know, you could have done better. Same goes for
hold on, you talking about that game where this school that had like tennis
smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check.
I had tennis that game out of school.
Technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
This game is fun in moderation.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
You can't play no
Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features
you really
and
can't.
resources available from Schwab.
Yeah,
You'll
you
learn
can't.
tips and tricks to help navigate Schwab.com,
where it is.
Slim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
I mean,
Head
it
over
just
to
kind of depends. They're like,
schwab.com/coaching and start
it just
learning
have to,
today.
okay, if you play defense a certain way,
Kick off the morning with the data
there's no
and
plan.
decisions moving markets. Morning Trade Live breaks down the macro moves driving
the only way
price
you do
action
get those
from Fed
animations is if
policy
you're like
to
precise
global growth
on
to
everything. You have to
inflation
like
risks
really try to stay
and
away from
geopolitical
it.
risks.
So that's where the skill base kind of come in. Like it's so you can't really tell because the
Morning
offense is
Trade
so
Live,
OP.
where the markets meet for the macro.
The bills are so
weekdays
OP.
at 10 a.m. Eastern on Schwab Network.
Yeah, like it's really OP the offense. Like
Stay connected to what moves the market. Download the Schwab Network app and stream
the
anytime
height
wherever
difference,
you are.
everybody that can shoot as big as OP. Like
Welcome back to Trading 360. I'm Marley King, live in our Chicago headquarters. It's time to spotlight Serve Robotics. Joining us now is Ali Shani, CEO and co-founder of Serve Robotics. Ali, thank you for being with us. I see behind you that you brought a friend with you today for the interview. Last we spoke, spoke, you had talked about some milestones that were important for the company. One of them was the deployment of 2,000 autonomous delivery robots by the end of the year. I hear you have some good news that you may want to share with our viewers.
Absolutely. I'm pretty excited to say today we launched our 2,000th robots, which is a huge milestone for us. We started the year with only 100 robots, so we have 20x of fleet size. We have brought them to 5-6 new cities. As of yesterday, actually, we went to Alexandria, Virginia, so it's been a really exciting few weeks for us.
And Ali, what does this milestone say about where the future of autonomous delivery is headed?
Look, I think we're going to have 1 million of these robots in a few years. This is just the way delivery is going to be done. If you look at, how much it costs, if you look at the way we do delivery, it's just not very efficient. Bringing some level of automation to it is going to be really critical for us to be able to scale this service and this offering.
And we're talking about scaling. When we've talked in the past, you say that these sidewalk robots are the leading proven use case for robotics today. And obviously, this robotic conversation is much larger than just delivery robots. What makes this category that's scaling so rapidly while others, like humanoids, are still largely experimental? What's driving the move in this market?
Look, I think it's always better to focus on a specific application that has to be large scale so that you can make a robot specifically for that application. There's a reason why wheels were invented when they were using moving platforms like that for so long, versus the human form factor is still new in terms of creating machines that can conform with that and do that effectively. I think we're going to be here in maybe 10 years.
I am reading a book right now.
Usually, with every
I have read a couple
technological
books.
advancement, it starts with specific machines designed for specific applications that do that really, really well before you bring it into more kind of generalized use cases, which is what humanoids do. So they're always exciting, but I think it always has to start with a more niche application, which is what we are providing.
And Surf operates in these dense urban environments, big cities. LA, I see them around Chicago, Dallas, Miami, Atlanta. You mentioned Alexandria, the DC area. These are big, complex environments, not a training ground in the suburbs. What's the biggest technical problem that you face? Because I'm looking to see that you have a 99.8% delivery reliability. What hurdles have you had to cross to get that number so high?
If you think about it, before the sidewalk robot came, you had robots in your home doing vacuuming or in warehouse floors. Those are much more simplified environment compared to a sidewalk. So the problem we had to solve was take that technology and bring it out into the unknown of the real world. Anything you can imagine is going to happen with rapidly boats on the sidewalk. We have seen everything you can imagine that happens in cities. So making a technology that's reliable day in and day out, the robot can leave out of the house in the morning, do work all day long, and
they always find a way to fuck it up.
That was the problem we had to solve, and as you said, 99.8% indicates where you are in terms of maturity. It's really working, which is why you're scaling.
And with your scale and maturity, in just a year, you've gone from one metro area to 6 major U.S. markets. What allowed you to scale that quickly while still hitting those 2025 goals?
Look, it was very ambitious. For 10 years, basically preparing the technology for this moment. We started already, and now we've proven that we were. We've been able to go to new markets like Chicago, and within weeks, reaching our SLAs for mature market, basically, which means, again, 99.8% reliability, 18 minutes or so per delivery from pickup to drop-off, that sort of thing. So it was a lot of technology that goes into this, from development of the AI to the hardware. We actually launched a new generation hardware at the beginning of the year called the Gen 3, which was a third of the cost of our last robot, but more capable in every way, from the battery life to the 5 times the compute to better sensors. All of that was designed over the last couple of years for this moment, and I think it lived up to the expectations.
And you've got some big name partners. You've got Uber Eats, you've got DoorDash, two of the biggest players in delivery out there. How central are these partnerships to your expansion strategy?
Look, it's really important to be able to go to a new city and immediately have hundreds, if not thousands, of merchants turned on and actively using the
the robots because, look, at the end of the day, this is a fixed asset, and what you need to make the economics work is utilization of the asset. So if we were to go, signing one restaurant at a time, door by door, it's going to take months, if not years, versus with the help of the folks like Uber and DoorDash, we can do that almost overnight. And this makes it so much easier to launch robots. You asked me earlier why these robots now. Part of it is these platforms exist. They have built the application and the demand, the customers, the merchants, they're all there. Now they're all demanding a better solution, and we are helping provide that.
And you're seeing deliveries up more than 40% quarter over quarter since 2022. I see here in some of the notes that you sent over that you think the robots will become ubiquitous over the next 5 years. So paint a picture for me. What does urban delivery look like in 2030?
Look, I think if you go to LA, to many neighborhoods we've been for so long, or Miami, or Dallas, Chicago, they are normal now. Like people walk around. One of the things that surprised me often is when people walk around and don't even look anymore. It's like a mailbox. Imagine when mailboxes were first introduced, it was probably very novel, and you leave your belongings in there, and no one's going to take it. Now, nobody looks at a mailbox. I feel like our robots are eventually going to be so normal that just like a mailbox, you don't even pay attention to them anymore. And that's already happening in some markets. Look, I think delivery is always going to be multimodal. You're going to have cars, you're going to have robots, maybe someday humanoids of different form factors, but ultimately we are going to need some level of automation introduced into last mile so that you remove cars off the street that are doing it today. As we like to say, why move 2-ton Doritos in 2-ton cars? It's inefficient, it's expensive, it emits, it also is a safety risk to everybody on the sidewalk. So that, to me, is the only way this future is going to look like.
And Ollie, I don't want to end this interview ignoring the star of the show who's behind you that you've brought with you. I can see that it says Montel is on delivery. Does each of the robots have its own name, or do they all operate under similar names depending on their purpose?
Oh, every robot has a name. We actually get suggestions from the community, and we usually try to honor it if we can. So robots have individual names. People call them by their names. It's actually really cute.
Well, Ollie, we appreciate you being with us today to talk about these important milestones that you're meeting, and also want to thank Montel for joining us today to Serve Robotics Delivery Bot behind you. That's Ollie Kashani, CEO and co-founder of Serve Robotics. Coming up next, we have the Disruptors. We'll be taking a look at Coinbase ahead of a reported prediction market launch. That's next. To the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques, like trend analysis,
somewhere they try to make 2K
price
like
patterns,
Fortnite too,
moving averages, oscillators, and much more. Best of all, you can ask questions directly to your education coach. It's interactive learning at its finest. Tune in live or on demand.
Everybody
Go
got
to
icy
schwab.com/coaching and start learning today.
Hip hop. Last year, my dad had a stroke. stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Trading 360. I'm Marley Caton here at our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. I would ask what's caught your eye so far, but I caught in the commercial break that you may have gone to meet Montel, our Serve Robotics interview that we just finished.
I was about to tell you that was a great interview, Marley. Great job. And I made a new friend, Montella. I mean, it's behind me where you can see that it does that last mile of your delivery, right? It's the largest U.S. sidewalk delivery fleet. It's really interesting, and really, I guess that's how it's going to be in the future, right? More of the Jetsons coming to us. In the meantime, seeing stocks really losing ground now, right? We started off with some up arrows. It looked like maybe we're going to have another record-setting day. Dow was the highest in particular, but right now we're really seeing weight on utilities and real estate and consumer discretionary, a lot of down arrows here. And when you look at the more, the heat map, all Mag 7 or lower. This after we closed with records yesterday for the Dow, the S&P, and also we did see that the Russell had a record close, not the NASDAQ. I also was looking at the sectors, and it was really interesting. I was looking at the care, regional banks, XLF for financials, jets, right? When you look at those airlines, XLI, industrial. I was just going through sector by sector, and I was seeing 52-week highs on all of those. You also have the equal weight S&P 500, which has been hitting record highs. You also have the equal weight S&P 500, which has been hitting record highs. But right now, it's definitely a risk-off environment. Some of the big laggards, I mean, we've talked about what's been going on. For example, Broadcom sold off, and Oracle's down over 30% in a few months. It's down 10% this week. Caterpillar, NVIDIA, Amazon, IBM are the big laggards. Tesla has some weaker sales. Lulu, which we're going to talk about in a moment, the outlook there is a little iffy in certain ways, but the big picture, I guess we're wrapping up the week here. Now really selling off the VIX, jumping now 1759, and the 10-year run at 419, or up to 421. I think that's notable too.
Yeah, kind of Green warned us that we might see an uptick in the VIX. We certainly are seeing it today. They were working candle yesterday. But let's talk about Lulu. You just mentioned that Lululemon had their earnings come out. They are getting up more than 11% higher. Can you walk us through some of the highlights and also the guide situation?
Yeah, I feel like there's good news and sort of less good news for Lululemon. I mean, the good news here is that they raised their forecast, they boosted the buyback by $1 billion, they upped the forecast for earnings per share and revenue where midpoints are higher, I'm paraphrasing pretty much, but that's the big picture. I mean, the other thing is that there are some concerns going forward. I know we have enough arrow here today, and I love seeing an 11% gain for the snake, but I mean, don't leave it out, that's down 50%, right, in 1 year. Bank of America's concerned maybe about some tariff pressures, margin pressures, and also you have changing of the guard there. Chip Wilson, who's the founder of this company, also a shareholder, they're having the CEO's succession plan now. Calvin McDonald's going to be out, leaving on the 31st of January. And also, you had Chip Wilson a little disappointed in the board that they didn't really have an efficient set up for who's going to be the successor in the lead role. So now they've looked to an outside company to try and fill this role. And Chip Wilson wanted some of the more independent directors who have really a lot of experience that they should lead the CEO search, and really someone who provides new skills and can build shareholder value. And Bank of America said whoever comes in, the turnaround's going to take a little time. So I do like that we're seeing some good numbers. You had a beat and a raise, but the longer term plan will really, a lot of it will depend on who fills that CEO role, and that has to be seen. In the meantime, Lulu is not a great stock, as you know. It went down as low as 159, right now it's at 207. I'm seeing targets of 210, 190, 170, and as you know, 220. Some points are lower than where we are. 220 is higher.
The first time they did that shit, my my
Yeah,
kids.
Nicole, thank you for breaking that down for us again. That CEO highlight and
So,
call
the day
out
I
there,
left
very
the
important, who
hospital,
will
I
be
walked to
leading
my
this
mom's
company
house.
at what arguably is a very pivotal time for them, but shares up
Be
close to
around
11%
family. Plus,
this
my
morning.
granny was there
Thanks to
about
Nicole
to pass
Catalina for
cancer.
breaking that down for us. And
That
now
day
it's
they
time
did
for the
that shit.
disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're talking about Coinbase.
I'm the
Bloomberg
children.
is reporting the company is launching a prediction market
Washing
and
dry
tokenized
downstairs.
equities
They
on
wouldn't let me use
December
that motherfucker.
17th, so coming
They
up
said
here
I
very
was going
shortly.
crazy
George,
because
what do we make
I
of all
had
of
turned
this?
the oven on. I had just walked in the rain. I had
Well, I
peed
think this is
myself
sort of
walking
the
to the
natural
house.
play for Coinbase and a
So
lot
I
of
was
these
trying to drive.
exchange-based brokers.
Yeah, I was like caught in the rain. I was like
really
walking
taken
through
off. They've
downtown.
actually
Like
cut
ain't
into
no
the
bathrooms. Like I had
market
to go in
share
the
of
building to use the
traditional
bathroom.
gaming and gambling outfits.
I am outside in
and
front of
get bets
everybody
into
in the
DraftKings.
rain.
But nonetheless, this is a market that is expanding, so Coinbase is naturally moving into this.
No,
or expected to move
I was
into
down.
this.
I was in the
They're going to be
hospital.
showcasing, as
So
you
I was
mentioned,
like
on the 17th,
in the middle
some
of the
sort
city,
of product to talk
downtown,
about their app
where everything
ecosystem, which
is.
includes, of course, their technologies associated with crypto
No,
trading,
no, you gotta see the city,
but
bro.
also
Ain't no
exchange,
alleyways,
investing in cold
ain't no.
storage. The company itself has been growing quite
Ain't nowhere to
rapidly,
pee,
I suggest,
nigga.
compared to the last 5 years. Net income margins are over 40%.
Okay.
Gross margins over 80% because this is really a technology firm. But nonetheless, this
Right, I did that too. But I was walking like hella blocks. So what happened was I was drenched wet anyway because it was like pouring down the rain. I was in the rain. The day this shit happened.
Using Bitcoin as a proxy is a dominant coin in that regard.
Yeah, and I'm gonna wash my clothes, change clothes like that, sit over there.
We're starting to see a little bit of a drip to the
Okay, that's
downside.
what
Could be
happened.
also market
So
momentum
when I
anticipating. Considering the market is also down today, and Barclays, I think, also suggests
no, it wasn't no bush.
that
I
maybe
told you I
a
was
little
walking
more
through the city.
expensive. And what they're doing here is reducing their price target. They actually have underweight rating
Alright, well,
or equal weighting in the stock.
this story happened, and then,
They reduced their price
like I
target to
said,
291 from
so I'm drying my
357.
clothes on
And the reason
the
being again is
not
a
on the
weakness in
oven,
the crypto
but
ecosystem, as well as the fact that expanding
No, I had
into prediction
clothes.
markets in-house, not using partnerships, is what they
I
intend to
took all
do.
that shit
It's
off.
going to be
I
expensive.
put some other clothes
Yeah, and
on.
it's really interesting too to look at sort of the analysts, and not a lot of commentary
I
yet
mean,
on this
you know what?
news
You know
because
what?
it's very
You know
new.
what?
But
Interrupted
the average
me.
price
I'm
target for
trying to
Coinbase
like
is
get it out there.
370,
Like shit.
950, right now trading
So,
at 260,
all I-
392. But
This
we
is
are
what they.
seeing
This is
some
what
of
they.
these price target
This
revisions
is
to
what
the
they did.
downside
No,
here with
bro.
Coinbase, especially with how
I
they're
couldn't do it in
purchasing
front of
Bitcoin and how
everybody.
closely they're tied. And as you mentioned, this news not moving the needle for them today. They're down almost 2%. So with that setup, and you know they've been pretty beaten down the last month, down 13% alongside Bitcoin. You know, how would you stretch for an example trade here, George?
Yeah, if you look at the price chart, it did hit some lows corresponding in
That's all right.
November, and also go back to May and June of the year as well. These are roughly
And
areas
that was
around
like
$237.
they
So
know none of that
the
shit.
challenge right now
It
for
says
Coinbase,
a whole bunch of
from a price action
payphones,
standpoint, is still
a
trading
whole
below
bunch of. It was
280
just like
average.
it's
So that's
just a
going to be a
long
barrier.
strip
So
from
the stock itself may
like say my
retrace
house
back to
and
those
going downtown
support
to the inner
areas.
city.
But at the
From
same time,
the
the
inner city
news
on
and their
down.
showcase coming
This is
up
a
might
bunch of
actually be really good, so the stock could
courthouse,
reach above that. So I'm going to play
everything.
this
I had walked past all
in a
that
bullish
shit.
condition with the potential or qualifier that the stock may pull back to that 237
Yeah.
area. So I'm going to go out to July and sell a put spread. I'm going to sell the 240 put and then buy the 230 put below that. Now altogether, this will earn you about $2.50 a share.
Don't try to keep
$2
walking.
a
Don't
contract.
close
So
it
again,
up.
looking
I'm
at the
already
strike price
soaking
of
wet.
something at 240, it's about $25 lower than the current price, approximately speaking.
Nah, nigga, that shit
The
was
delta on that 240
That's-
that we're selling is
that's-
25.
that's how you stay
Implies a
warm.
75% probability
That-
of profits.
That's not nasty. First of all, you gotta look that shit up. First of all, that shit can.
And then just in case it just gaps lower and continues, you gotta consider the risk, which is 750. And that only manifests if the stock hits 230 or lower by expiration in 35 days.
No, I pissed
George, we
myself
appreciate you
before.
being with us to talk
There's
about
nothing wrong with
Coinbase
that.
today. Again, sure,
But it was
down
just the
11.5
situation
right now
where I
at
had.
265.07. That's George Tillis. Thanks again. Coming up, we've got our 360 round. We're going to bring in our panel to break down Broadcom's earnings, which were boosted by AI chip sales.
That was their
Shares are
argument
under
of
pressure.
what they
And
were
we
trying to
actually
say.
will break
Like
down
I
the
was
numbers
going
next
crazy
on
because I was drying my clothes. And they had nothing to eat, so I opened up a couple the pans, put them in the microwave. You know, I warmed up some food in the microwave. And like I said,
I have a question for you.
Yeah, I took some, you know, they had like some
Brandon
noodles,
had
like
that much
the
love
shipboard
for the
noodles.
branches in
I
the
took
area.
them out of the
He was
cans, put them
starting
in the
out.
microwave.
He worked hard, and after he passed
So
away,
they was just,
the torch was
they
passed
was
to
just
me.
like, oh my God, he's
And
eating raw foods and all kind of
with
shit.
the
I'm just
jury,
like, bro, it's
helping
fucking
with the estate
scam.
distribution. The two
Like,
grandchildren,
it was a bunch of
for their
little
college
kids saying a whole bunch of
education.
dumb shit. They got
Someday it'll be
the
their
Benjamin
turn.
course signed with a mama that
This
was like
is
far
Fast
away.
Market, built for
And
traders.
like I said, they had to do this shit twice. They did this shit one time in Rob.
Trade ideas.
The only reason why I bring it there is because my friend,
Focus on execution.
she's like,
Options to
I'm down there with her, very pushing taxes.
We bring decades of trading experience to every site.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Had it out for me. I didn't know.
Welcome back to Trading 360. I'm Marley Caden. It is time now for our 360 round. For that, let's bring in our panel to discuss Broadcom. Joining us now, Kim Forrest, Founder, Chief Investment Officer at Global Capital Partners, and William Kerwin, Equity Analyst at Morningstar. Kim, we'll start with you. I'd love to get your thoughts just on the report that we got yesterday, and also the response that we're seeing since getting those numbers.
Right. Well, initially, it looked like, things were on marche. Everything was great. They surpassed numbers. Demand looked good. It's all good, right? And then, the earnings call. And I guess there was a little chill there. There was some product that hadn't shipped. The backlog was larger than people had anticipated. And there was some qualification around some items. Most margin is one area that, the current chips would have a slight 100 basis point decline in this next quarter. Didn't sound terrible. But what I think is happening here is the whole, if you didn't exceed greatly, then you didn't really, satisfy the investing public in AI. Because we think it's big.
And we've seen that too. William, what's your thought there? Is this just another case of this earnings season where we've seen if it wasn't the best report of all time, it just simply wasn't enough?
What's that mean?
We really liked the results, and we were frankly a little bit surprised about the reaction after the market last night and today. And really what we see is that AI demand is accelerating. It's already at an extremely high growth rate. Broadcom expects that to accelerate this year, potentially double again the year after that. And they have this multiplicative benefit here where their existing customers, like Google with its TPU chip that it co-designed with Broadcom, is seeing immense demand. And we have these new customers like Anthropic layering in next year. So we saw everything extremely positively. We're bullish on the name. We raised our forecast. We raised our valuation up to $480 a share. And we think this sell-off is missing the forest for the trees with this larger positive AI picture. And it's an attractive entry point today.
So Kim, you both agree that this sell-off from both of your perspectives is unjustified here. So what is driving this market overreaction? What was the primary driver to move us down so significantly?
I think people are very fearful that the current scenario, which is large language models, are the AI delivery unit, and that we need tons and tons of data centers and thus tons and tons of chips in perpetuity to support them. You probably don't know this, but just like 2 minutes ago, something went across the wire that Oracle is delaying a data center from 2027 to 2028 at the request of OpenAI. So I think this is everyone's fear, is that the rollout isn't going to happen in the next 15 minutes, that demand isn't going to grow to the sky, and that a lot of these names are already what some would consider overvalued. Now, I'm a longer-term bull, but I also doubt that, today's AI is the thing that's going to win. We'll put it that way. And, that data centers will cover the earth.
And Kim, you bring up a really important point, and one that we've talked about in the past as well, that everyone has this expectation that the AI revolution is going to move at the speed of light, and they want everything to happen now, and they want to see profitability and growth now, and it's just simply not possible. So, William, coming over to you, seeing Hock Tan not give AI revenue guidance here, in your opinion, How significant was that? Was that the right thing to do here, to say, I simply just don't have enough information to do it, knowing fully well that we could get a reaction like this?
Well, we also focus on the long term, like Kim, and really, I think Paktan, even if he's not giving explicit guidance for the full year, he's laying the trail of breadcrumbs for us to understand what's going to go on. They've talked about one $10 billion purchase order from Anthropic for the second half of the year. Now they announced a new $11 billion purchase order on top of that last night. They onboarded a new customer where they expect a $1 billion purchase order this year. So really, we're expecting a surge in second half growth. We think that, there's enough there even outside of explicit guidance to call that out. And I would just comment on, the OpenAI Oracle data center delay. This was not a surprise to us. Broadcom announced this 10 gigawatt deal with OpenAI for capacity over a 3-year period. We really don't think that that's possible to build out in such a short-term fashion. We think about supply constraints, we think about power constraints in building out these data centers, but we see it as a signal of intent that this capacity will get built out, even if it's not in the next 3 years. As Kim was saying, over the longer term, we see this as very constructive.
Well, I appreciate you both being with us to walk through Broadcom's earnings and also for breaking some news with us today. Oracle delaying several data centers for OpenAI out of 2028 from 2027. A very important point there. Thanks to Kim Forrest, founder, chief investment officer at Boca Capital Partners, and William Kerr-Wendy, equity analyst at Morningstar. We appreciate you both being with us for Broadcom's earnings. And I want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. Fast Market with Diane King Hall is coming up next, but I hope you have a great weekend.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm about to go outside and smoke. Been a minute since I rolled
Welcome
up.
to Schwab
This is my
Network,
last
where
one.
real-time market coverage meets expert strategy. From the opening bell to the closing
My
bell,
last
we
one.
look at Get inside the minds of pro traders.
My point is that they're
What am
getting
I going to do now?
a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and
I'm
precision.
down for the day.
I think one of the
Just
most
like everybody else
important
is down
things
for the
is you're
day.
making a play in a risk-defined way here going into earnings.
Yeah, I got no
Would be a
more
further downside area
no
to
more
watch.
margin trades. I love say zero for like the next 4 days.
And trusted financial journalists streaming live and on demand.
Man, look at money.
Schwab Network, streaming
But I'm trying to what I'm trying to do is
anywhere, free. Schwab Network.
I want to intro something.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more.
It's in
Hear from experts on where
It's in
markets
Pearl
may be headed,
because
spot
Michael
opportunities,
Seller
and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Steph Lannis, live from the New York Stock Exchange. When the market moves, we're on it.
He got
Getting
to
the
pull out, he got to
reaction,
take his shit out of there,
strategy,
and
and
once he
sentiment
takes his
in
shit out of
real
there, it's
time.
gonna fall through.
Stream Schwab Network at schwabnetwork.com.
I think if he starts selling it, it's gonna be a cold red on Bitcoin as soon as he starts selling that shit.
Welcome to Schwab Network, where
real-time market coverage needs expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of
I'm gonna try to trade
traders.
some crypto.
What is it they're getting?
I got a lot of work to
Higher
do.
rate of change in sales based on the guidance, but not saying rate of change in
I'm gonna try
yeah.
to finish all my editing,
Biggest headlines, live analysis, breaking
work on a couple
news,
projects. I'm gonna try to stay away
ideas.
from the game this weekend and just work hard.
Shows built for action. We break it all down.
Weekends is probably the best time for me to actually lock in and work hard on shit too.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free.
Try to see if I can
SchwabNetwork.com.
take this phone back and get this capture.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on Noon Eastern here at the New York Stock Exchange, and we are watching a pullback today after a first round of records yesterday. Forget about it. We saw a couple records this morning. Those are long gone right now. See if there's any shift throughout the day. We'll give you a check of your lunchtime scorecard. The S&P 500 off by more than 1% now, being dragged down by information technology, the weakest of the bunch, followed by communication services and energy, but it's wide-ranging red across the sectors. Within the S&P 500, the Dow right now lower by 0.5%. Keep in mind, earlier in today's session, it hit a new record. It's pulled back now as we hit the afternoon hours. NASDAQ 100 lower by nearly 2%. From 2,000. Small caps after also earlier hitting another record has pulled back off by 1.33%. Here is the roadmap for today's show. We'll look at example option strategies for Amazon, which is now the weakest of the Mag 7 this year. Plus, team from Lyfolio will be along with new sentiment data on Meta. And Walmart is also on our radar today. Now that we've got the roadmap for today's trading action, it is time to bring in my co-host. We've got Joe Mazzola in our Chicago studio, and Kevin Hayes joining us live from the Seaway. As you know, we've got covered from exchange to exchange and beyond. Tom White has the day off today. All right, Kevin, let's start out with what we're watching on Wall Street. We'll get Joe in here in a moment. Wall Street pulling back. You had some new records this morning, but now you've got this pullback, the speed bump that is checked. It's almost like it was not necessarily a head fake because we saw some weakness. What was your take when you think broad strokes about this market, Kevin?
Good morning, Diane and Joe. I think you're looking at an interesting market. It's like the Magnificent 7 versus the 693. And right now, the information technology, that segment that you already mentioned, is the one that's dragging down a lot of the other markets. Communication services are coming too. Consumer discretionary was higher, now it's lower on the day. But this was a market that was, here's the stat that I think tells a lot. Right now the S&P is down 1.14% as we start fast market. The S&P equal weight only down 0.6%. So there's still an outperformance by the equal weight version of this S&P 500. Obviously the news today, Broadcom is weighing down the market. Some of the announcements that we're going to talk about with extending these data center contracts with Oracle, those hit the market. When that news came out, hit the market again. So information technology, a sector that was up at one point, I have it up, starting the day, it was up about 24% year to date. It's down 2.6% today, so it's closer to 20%. Still higher, but definitely weighing down the market as there's just uncertainty around this sector's ability to deliver on all the things that they promised. And the biggest problem seems to be energy and getting these data centers built and up and running, Diane.
Okay, Joe, let's get you into this conversation and talk broad strokes about the market. We'll talk Broadcom and, the Fed shortly, but what's your broad take when you think about some of the, pullback that we're seeing as we we hit the lunch hour.
Yeah, I think Kevin's right. IT was really what kind of started to drag the market down. And here's what's interesting. We actually, not only did we're pushing towards new highs, but Brett was really strong in the morning before pulling back. And the Brett overall, yes, it's turned negative, advancers versus decliners, but it's not too bad. It's really more kind of centered within technology. I don't think that you can just kind of push this aside and say, well, it's just a tech thing, because as Kevin mentioned, it's an energy thing, communication services, so those are coming down as well too. But I do think it's important to kind of understand that while we're seeing this pullback in tech today, we have started to see this rotation continue. So there is an undercurrent that can hold up the market should technology pull back. The problem is, though, with the Mag 7 representing over 30% of the market cap of the S&P 500, it can have an outsized effect. So, even though the Broadcom earnings were good, the prospects for the future were good, the spend, I think that the AI has now turned, or the AI trade has now turned into kind of an albatross, in that people are looking at it and saying, hey, when are we going to see revenue recognition on the AI spend that we're hearing so much about, and that continues to just kind of weigh in the markets today.
And that's the thing, though. Broadcom's numbers weren't bad when they released them after the bell. It reminds me of what happened with NVIDIA. NVIDIA had a great quarter, gave good guidance, and the stock initially rose on the news before selling off. Similar thing with Broadcom. Now, to be fair, on the earnings call, it seems like there was a takeaway there that rattled investors, right? With the CEO saying that they had $73 billion worth of AI
God, they said
but those orders will be delivered over the next year and a half, not all at once. So it seems like investors got skittish around that. They try to kind of calm investor fear. Analysts don't seem like they're completely out on this, but the reaction on Wall Street today is clearly sell first, ask questions later. Kevin, what's your take when you look across tech?
I want to go check it out.
Remember, when we covered Broadcom yesterday, we had a glowing coverage
and then insurance
of this name and
yesterday,
what they're doing with AI chips. Yet, we had a bearish trade on it. Diane, why? Because of the valuation, 95 times earnings, and the fact that a lot of these stocks, like NVIDIA, after their earnings, put up great earnings, didn't help. Remember, some part of our theme yesterday was, can they put up good enough numbers to hold the stock at this level? Well, the answer was, yes, they put up good numbers, but not good enough to hold the stock. And when you're priced to perfection, anything that misses, just like Lululemon, when the bar is extremely low, any bit of good news can rally a stock. When your stock's at the all-time high and pricing in perfection, anything can shake and rattle the confidence of investors. So that's what you're looking at. If you look at the stocks we covered yesterday and how they're pricing out today, it was high bar going down, low bar going up, Diane.
It does seem like, though, to me, this seems overboard. Joe, what's your take when you look across Broadcom and then just the downdraft is causing across tech?
Investors are really starting to analyze balance sheets, right? It was the sterling balance sheets that really attracted investors to the Mag 7 and to a lot of the AI plays, because, remember, Diane, the majority of the 2024, 2025 spend was cash flow, right? And these are companies that generate a ton of cash flow positive. Oracle kind of, flipped the book a little bit by going to the debt market. It seems to have turned their pulse spots really wide, basically by 100 basis points in the last couple of weeks. So now, the investors are starting to question, can we continue to finance this? Is the debt market the way that the financing is going to continue going forward? And what does that mean for cost of capital? And so now that now that that's thrown a little bit of a curveball into the valuations, I think it's a fair assessment of kind of where we're at in the space. Now, that being said, Oracle's probably the outlier at this point in terms of how much debt there is accrued on its book, or at least percentages. So I don't think that there's necessarily a fair comparison with Broadcom, but I do think, though, that once you kind of paint that broad stroke across the entire space, it's one of those, as you said, you sell first and ask questions later. I think that's what we're seeing today.
And yeah, I do want to stay with this, especially the Oracle piece, because now you have shares of Oracle extending yesterday's slide. Now today down another 5% today. And they managed to kind of stem some of the losses by the end of yesterday's closing. But today, now they're moving to the completion of the data centers for OpenAI in 2028. So it looks like investors do not like this timeline, and the patience is wearing thin. Kevin, I want to get your take on that.
Well, Oracle pushing back these timelines to 2028. Here's the positive thing if you're trading Oracle. If you're dialed in on Oracle and really paying attention, when they came out with their original timelines, they didn't seem realistic. And a lot of people that were dialed in on Oracle said they can't make those dates. They're going to have to push them out. So all Oracle's really doing here is putting the dates where they probably should have been in the first place. Now, market doesn't like that. They don't like surprises and they don't like uncertainty. But these dates out to 2028, where delivering some of these data centers isn't really a surprise to people watching this entire sector. That said, it's not good news, right? They didn't surprise us on the positive side. They basically put it wherever a lot of people thought it would be in terms of delivery. So, yeah, 2028, I think you should get used to things like this. These data centers, getting the power, getting everything they need, I don't think this is going to be a fast build for any of these. So this headline that you're seeing from Oracle today, I think you should get ready for more of that, Diane.
Okay, that's a good point. And then, you hear that these things do take time, and it's starting to seem like that is the case. Joe, I'm curious if you have a similar take to Kevin on that, especially, maybe the view of investors, and you tell me, is that a better place to park money for the next couple of years?
I think it's fair. I think you can see a similar risk-off sentiment if you take a look at what's happening in the cryptocurrency space right now, too. Look, Bitcoin broke below 90,000. Some of the movement that you might be seeing in the tech space, could be attributable to maybe some calls, some margin calls against sort of the Bitcoin position. So that's very possible. I think the other thing that I really think is interesting too is you look at energy today, you're getting a significant pullback in energy as well, too, just because of what Kevin was talking about, some of the energy companies, some of the utility companies that have been relied upon as powering the build out of these data centers. And at the same time, the valuations on some of those companies on a forward PE basis have gotten astronomical. And so, it's a little bit of a pullback today and back to normal levels. I think it's healthy for this market. We're still looking at a market that's trading 22 times forward earnings, so it's not cheap. But I don't think we're looking at valuations that we saw back during the beginning of the tech period or back in the dot-com era. So, I think it's a healthy pullback. What we've seen, Diane, in the past is you get a 3 or 4% pullback, which is not a one-day thing, but over the course of time, we've seen dip buyers step back in. That's what we saw in November. I'm not positive that we're going to see that here again in December, but this is a fairly shallow pullback from a market that's done pretty well and hit an all-time high. So I think taking a step back, taking a deep breath, and saying, okay, what does next week kind of set up? We'll see kind of how investors react, and then we'll really see kind of what happens as we get towards the end of the year, and we start seeing maybe some of the selling of the losers, right? As our investors are rebalancing the portfolio and doing some tax loss harvesting. That'll be a little bit interesting to me, kind of see what they're selling.
And what's happening next week, I think we're getting a preview of that with some of the Fed officials sounding off today with their stance on rates. You had Chicago Fed President Austin Goolsbee saying in a CNBC interview that he prefers to wait for more data. We will get more data next week. Now, his dissent, though, was the first since 2023 when he joined the central bank. You had other Fed officials like Beth Hammack also commenting. Kevin, what's your take when you look across the Fed speak today?
Yeah, I heard the entire Austin Goolsbee interview, and yes, he basically said, I think interest rates will be low next year, but I didn't have enough information to front load the cuts or what he perceived to be the front loading of the cuts right now. At the same time, he was making that comment, Anna Paulson was saying the exact opposite. She was saying, she thinks labor market's the problem, she doesn't think tariffs are causing inflation, and she doesn't think inflation is a problem. Then Beth Hammack came out slightly after that and gave a more hawkish view, more in line with Austin Goolsbee. Here's the thing. January 1st, Austin Goolsbee is out as a voter and Beth Hammock is in as a voter. So I think that's interesting going forward, how that will play out. But Austin Goolsbee's final vote as a Fed member this year will be a dissension. But he did say why, but he did also lean to interest rates will be lower next year. He feels that, but just he couldn't pull the trigger now. Good thing, 9 other people did.
Okay, all right, Joe, your take?
Yeah, it's interesting because when you look at the dissidence on the Fed, it is a higher level than what we're normally see, especially with Fed Chair Powell. However, look, you've got 9 people that voted for a cut, and I think having that healthy conversation, having that healthy debate is good for the Fed, and I kind of hope that kind of carries forward into the next Fed, because it'll be really interesting to see with the new voting members, especially as Kevin was talking about a new hawkish member coming on. I don't think that the market might be pricing in the idea that there's only one cut or potential for no cuts next year. I think right now we're pricing in 1 to 2 cuts. Whether or not the market will be disappointed in terms of kind of what the new Fed makeup looks like, time will tell. But right now, if you kind of look at the way that the market has been pricing their expectations, they've been fairly bullish in terms of what they're going to get. So I think that having another hawkish member on the board, somebody who is a dissident, is probably good for that debate, and I think markets should pay attention to that.
Okay, Kevin, I want to get a quick thought from you. When we look across the retail space, in particular Lululemon, I got to eat crow today with Landon when we chat with him, because I didn't see this one coming. I do, Kevin, you're right, I do. I will own up. I'm glad we're going to be chatting with Landon. It's rallying 10%, and this is even in a down market. Your thought?
Yeah, look, Lululemon, this was a...
Look at the market trying to bounce.
I think, Diane, this is more of a trading story than like an investment story. This is, the bar was so low, and the expectations were so low, and the sentiment was so negative, that they gave you just enough good news to have this stock rally 10% off its recent lows in yesterday. So it's a great day. They're changing CEOs, right? They're making dramatic changes, and their international business was a bit stronger than we thought. And this was it's really a lot of this, Diane, is a relief rally out of Lululemon, because the sentiment was so negative. And just like if you compare 2 of the stocks we covered yesterday, Broadcom, expectations were in the sky. Lululemon, they had no expectations. And both, Broadcom went down, Lululemon went up. It's pretty incredible, but it's more of a trading story than it is a, investment or quality of the company story. But it's why we do this business, Diane. It's awesome.
Absolutely. It's coming off the mat today big time. All right, guys, let's put a pin in it. We've got bull versus bear coming up. Guys, get their example trades put together for Amazon. It's been the weakest performer of the Mag 7 this year. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Amazon is the weakest of the Max 7 year to date, and that stock is trading under pressure like most of its peers today. But some analysts say 2026 is going to be Amazon's year. JP Morgan Chase's Doug Analyst says get ready for Amazon to show strength next year. Going so far as to put it on JP's best ideas list. Behind the conviction, AI spending in 2026 will break new records, and Amazon, along with Alphabet and Google, are best positioned to get the best returns. For Amazon, analysts view it's not just about AWS, but he also sees solid growth in its retail business. All right, time now for Bull Bear Tug of War. For that, we want to welcome back in our co-hosts Joe Mazzola and Kevin Hinks. It is Bull versus Bear time. Before we get your example trades, we have to talk about your take on Amazon.
Sorry.
When I was going through the Max 7 today, I was like, okay, let me make a list and see who. I already knew who was at the top of the leaderboard, but I thought Tesla was still at the bottom. It's not. It is Amazon. Joe, I'll start with you. Your take on Amazon before we get to the example trades.
So what did we talk about in the last segment that was important? Free cash flow, right, versus debt. And so what is Amazon? What are the expectations from JP Morgan for Amazon for 2026? It's free cash flow will more than double to $59 billion next year from the 2025 estimates of around $24 billion. And so they're expecting that from a margin expansion, specifically in the retail business. They're doing a good job in terms of the advertising. But, so here's the thing, and this is where the debate comes. And not only the bull to bear debate with Kevin and I, but it's also a bull to bear debate in my own mind to a certain extent, because fundamentally, I think the company could be positioned for a nice year in 2026. Technically, I think the setup right now it's one of those almost like an inflection point, right? Because the shares are sitting basically right at that confluence of the 50 and the 100-day moving average. It's right around $227. You could see a couple things. You could see a retest of that 200-day moving average. That could be in play around the $215 level. And specifically, some of the oscillators that I look at, whether it's an RSI or a MACD, they're rolling over, and you're just seeing continued kind of downward sentiment on the charts. And with the stock only up 3.3%, as you were talking about, kind of the least, it's done the worst of all of the Max 7s this year. I just don't know what that catalyst will be to push those shares up towards the end of the year. So that's kind of the way I'm looking at it. When I have a debate and I'm saying, okay, fundamentally versus technically. Fundamentally, I look at it and say, yes, I think this company probably has value that it can unlock. I think JP Morgan talked about free cash flow. Technically, is it the right time? And as of right now, the way that I'm looking at the charts, I think that it's probably a better setup for a bit of a bearish trade than a bullish trade.
Okay, Kevin, your take on Amazon.
I look at this company and I think to myself, what are the key parts of the U.S. economy? What are the hottest parts of the U.S. economy? Is it cloud? Yes. AWS, largest cloud provider. Is it digital advertising with streaming? Yes. Amazon Prime, massive digital advertising, and coming soon, more sports, right, is coming to Amazon Prime. How about e-commerce? Well, how about this? They are not only, they can deliver you, you can now buy online used cars and fresh produce, which tells me, you know what you can buy online, Diane? Everything. Everything you can buy online. And by the way, coming to a balance sheet near you very soon, data centers, the next thing they're getting involved in. So this company, which is for the year to date up 2.3%, they are involved in every most important part of the current U.S. economy, and so it's just very difficult for me to watch a dip like we've seen and not try to be involved in it. It's just they have now the risk. Sure, the market doesn't like when they spend capex. It never has. In the history of trading Amazon, they don't like when they up their capex spend, so they've got to be very responsible there. But once they slow that down and let the earnings come in, that's usually when the stock recovers. Just kind of waiting for that to happen, Diane.
They sell, I'm pretty sure I've seen that they sell little houses on there as well. All right, let's get into the example trades. Joe, go ahead. Sorry, Kevin, your thought?
No, I was just saying, they literally sell everything online now.
It's true. All right, let's get into the example trades. Joe, let's start out with yours.
And I think Kevin makes a fair point. So what you'll see on my trade is it's not necessarily a long-term bearish play. If anything, it's a short-term look at a put calendar, selling the December 2025 26th day expiration, and then buying the January 16th, 2026 expiration at the 215 strike. I think when I priced that was around 210, it's probably around 220 right now, probably expanded the value. But what it's looking for is looking for kind of a move back down towards that 200-day moving average. And it's really right based on technicals. Like I said, I think fundamentally, the company's probably set up a little bit 2026. I would agree with Kevin, and I would agree with David Morgan analyst on that. But I think if I'm looking for a near-term trade, I'm looking for kind of a pullback. And look, as you can see today, Amazon cannot escape the AI trade. So if AI trade, if the AI trade is pulling back, and which it is today, Amazon's going to be susceptible to that. So I'll pull back down to around 215. It's not a big move. It's about a $10 move on a $227 stock. It doesn't take much to get down there, and you don't need it to get all the way down to 215. And what I like about it is, as it's making its way down there, you can start rolling some of those front month options until you get down to that expiration on January 16th. And then you can make a decision whether you want to turn it into a spread or whether you want to close it out. I love the calendars because they give you a lot of optionality. No pun intended.
There you go. Kevin, your take on it before we get to your example trade.
Well, Joe Zola knows that I do love my put calendars. If you are modestly or significantly bearish in a name and want directional as well as implied volatility coverage like Long Vega, the put calendar is the way to do that. And the risk on a put calendar is the debit paid. That's it. And this put calendar will give you the ability to extend duration and chip away at that net debit. And so you've got a delta component, you've got a Vega component, both that would work if you get a downward move, which Joe's right. It doesn't matter how good your company is. A global sell-off will affect a name like Amazon. So if this is a global sell-off, Amazon will follow the market, and this is a dual threat way to play the downside of Amazon, Diane.
And Kevin, I have a feeling based on how you spoke earlier that you're taking obviously a different approach. So what's your example trade?
So when I want the ultimate amount of exposure in terms of a paper money trade, and I want a delta, right? I look at the call diagonal. That's my go-to bullish play, and it doesn't mean it fits every situation. But if I want to just buy the dip without buying stock, a call diagonal is the way to do it. Same family as Joe Zola's trade. It's in the calendar strip family, but it embeds that call vertical in there that gives you a little more teeth directionally. In this case, I went out to the January 2nd and bought the $225 call, basically at or a little bit in the money, and then sold next week's January 19th $235 call. I put that in for about $6.30, trading closer to $6 now. So it's trading a little lower as the market has sold off, Diane. But this is a call vertical that gives you about 35 almost 36 long deltas, and this is a way to, again, it's a 2-week spread, so you will get a chance to extend duration on this trade, but it's a way to get to simulate a covered call without buying the stock, and you do it for a fraction of the price and therefore a fraction of the risk, Diane.
Okay, Joe, your thought on this real quick.
Yeah, I think he did a nice job summarizing the setup and kind of the risk involved, because basically, yeah, you are simulating what would basically be a covered call without having to own the shares of the stock. So a much cheaper way to do it from a debit perspective, and in terms of how much capital is required, it's a slightly bullish play, and you know, if Kevin gets that move within a couple of weeks, it'll work out well.
All right, thanks, guys. That's a Choose Your Own Adventure Bull versus Bear take on Amazon today. Coming up, we got cash tags. The team from Lightfolio will be along with new sentiment data on another member of the Mag 7. That's Meta. But this is really about the consumer here. Keep it right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Steph Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
I think the train might be
Tune in
trying
live
to burst though,
or
so
watch
I'm looking
on
for a
demand.
bounce somewhere.
Head over to schwab.com/coaching and start learning today.
No politics, no spin. Just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the CBO. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Lightfolio, taking a look at Meta today in the context of consumer trends. And before we get into your data on Meta today, Landon, I was glad to see that it was going to be you, because I have to eat crow on Lululemon today. You were right. I didn't see that move coming. I mean, it is off the mat big time today, even in the context of a weak market. Kevin knows I told him earlier I was going to own up to it. All right, so let's get into it with Meta today. What's the broad strokes take from your data?
Well, first, on Lulu, you weren't really bearish. You just said that a lot of people were buying, Viore and Alo Yoga, but I gotta tell you, credit to Kevin, that trade was unbelievable. Kevin, I don't think you could have picked better strikes. So well done on that. That was an awesome trade. So we're a good team. Let's keep it up. Shifting over to Meta. This is they're the leader of social media. And when you look at how well they've performed, their ads were up 26% year over year. They're really getting into AI spending, which is pressuring margins. Some people don't like that. Some investors think they're spending too much, but I'm going to make the other case. I think that they got to spend more. And I'll lay out that case here today. And one of the things that they're doing is they're focusing on increasing the dollars per user as opposed to increasing the number of users, which, we should all be so lucky to have half the world as users. So I think that's a reasonable
shift for them. I mean, once you get to 3.5 billion daily active users, I think you need to start monetizing them more rather than trying to get to 4 billion, right? And they're Xing the metaverse thing, so which is great. I think investors want to hear that. But on the AI front, I think that is really going to be their feather in their cap in a couple of years, because right now there's a shift going on, and right now, or at least say a year ago, everything when it came to new product discovery was done through social search, right? It's social media, people talking about influencers or just friends posting things that they've got or found, and that's the way that most new products have been discovered. Now we're starting to see a big shift to go to AI, where maybe you're interested in a certain category and you hop on GPT or something like that, and you want to know, what should I be buying? What product do I not know about? Or what's the best this type of product? What's the best that type of product? And you can see the growth here across the sector. Yes, Facebook is down significantly. Instagram is up a decent bit. I say significantly compared to the rest. But you'll notice the top one there, GPT, is off the charts. It's doubled over the last year. And actually, when we measure the influence of traffic coming from AI on Black Friday, it was about 7x year over year. So GPT and all the others are really pushing people into their purchasing decisions. In fact, about 1 in 5 purchase decisions around Black Friday, Cyber Monday were made using AI. So starting to get really big traction there, and I think that's only going to increase. And so as we move towards this new world where instead of social interactions, or less so anyway, people are looking at AI and asking it for recommendations, Meta has to have that strong AI platform. They're building it. They're doing a great job. And what's interesting about AI, a lot of people forget about this, is the entire value of AI is driven by the data, the source data, how it's trained, the training data. And you couldn't ask for better training data than all of Facebook and all of Instagram combined. What are people clicking on? When they watch this, what do they do next? Which people do they follow? Are they likely to follow that person? What do they do when they see this ad? That's an unbelievable gold mine of data to power and train an AI on. And so I love the fact that they're spending a ton of money on AI. I think that that's going to be the thing that makes them the winner over the next few years in this category. So, hats off to them. I think they're going to do really well. They're doing pretty well so far, but they're positioning themselves for the shift that otherwise could really hurt them. If new retail purchase decisions shifted from social data, social search, over to AI, and they weren't part of it, they would really be left out, because ads are basically how they make all of their money. So their ad spending is up, or their ad revenue is up, but it would go down if they weren't as part of this AI movement. So I love the way they're positioned, and the stock is it's kind of in the middle of their 52-week range right now. So overall, I think this is it's a pretty good position to get into Meta moving forward. But I really like long term how they're positioning themselves with AI.
Landon, Facebook shopping, Instagram shopping live rent free in my head, because they can pinpoint what you're looking at and what you're looking for and fire shopping ideas at you. My children tease me because I shop via Instagram, and they want me to stop, but they like the little gifts I buy, but they want me to stop shopping. But AI is so tuned in to what you're interested in, Landon, and this is the future. You're looking at more and more, and your data shows it, how the traffic is just moving to e-commerce more and more. And I don't think there's there's always going to be some form of brick and mortar, right? But the trend going towards e-commerce, I don't know how you stop that, Landon. I don't know how it just doesn't keep getting better. And the Amazons, the Meta, Instagram, the Walmarts, another stock we're going to talk about today, even probably Target, you've got some other names up here, they're all going to benefit from this. This is where the trend is going. Am I wrong there?
No, you're right. I mean, it's just easier, right? I mean, it's just easier. Just discovery, physical discovery, it definitely will always have a place, right? But that's how Five Below makes their money. That's how Costco makes their money. That's how pretty much every store in a mall makes their money. But it's just easier. If you want something fairly specific, even if you don't know exactly what you want, but you need some running shoes, getting it online is much easier than it used to be. You used to go to Foot Locker, try on a few, talk to the guy, see what people think. Now, you can just get on either social media or even better, like I said, get on AI and ask it, and you're going to get some recommendations. You can order it, boom, it's at your house the next day. So yeah, it's unbelievable. But I do want to talk about this chart because going into this quarter, I think a lot of people had eyes on Black Friday, holiday shopping, just overall, what's the health of the consumer? We've always talked about this K-shaped economy, and it's starting to look like the consumer is stronger than really most analysts thought, stronger than even I thought. And you can see here, just year over year, they're continuing this holiday, Black Friday, Thanksgiving, all that Cyber Monday has been much stronger this year than I think a lot of people anticipated. Numbers are up across the board, and if you look at some of what the retailers have put out, Abercrombie, AEO, Lulu, Dillard's, Ulta, they're all posting strong numbers. Cyber Monday spend, Cyber Week spend is up about 7% on a year-over-year basis. So the narrative that retail is going to struggle, that the consumer is really getting pinched this year, is not being supported by the Black Friday and the holiday shopping for sure. So I think that that's good for everybody. That's good for Meta, of course. And then going back to Meta, looking at their sort of their longer term, and if you look at where they're at now, you have about half the world daily active users, which is incredible. But they're positioning themselves, think about where they're at now. They have 100%, pretty much 100% revenue comes from ads, and it's all like creator-led content that's pushing things. They don't have any negative checkout. It's all like product tags and creator links and DMs and affiliate links and things like that. They have a lot of opportunity to get into the checkout part of things and really take advantage of some of these. They can get into the market, get actually selling items if they want to. But they're getting back to the AI.
Like, be smart with your shots.
Having
like
3.5 billion people on a daily basis
smart with your
do
past.
things
Don't just
on
throw
your
it because I'm talking to
network,
you.
and you're logging all of it, you're figuring it out, you're tracking it, you're feeding that into an AI.
I know, but if I'm
as a
next to the
search,
defender,
as
I still gotta create the pass. You the point guard, you
these
gotta
things
see
are
the
going to be
pass.
better than
You
yourself.
can't just throw it to me because I'm a quarter with a defender.
For you in the next few years, and I think they're going to make
You gotta hit me while I'm open for the three. That's what I keep trying to tell you. You know what I'm saying? You gotta catch me wide open somewhere. You gotta be on you gotta dot me type shit. You know what I mean? That's a dot me fucking thing.
They've got to continue to invest more. They're positioned
You gotta dot me. You can't
to
just
be
be throwing
the
this shit
number
random.
one beneficiary of AI because of, again, that training data that they have. So, look what they're at.
Oh, girl, what the fuck?
Landon, it's almost 2 weeks.
What do y'all be waiting on? That should be so easy. Just take
on these
off.
platforms. It has been
My
a
DK in the
fine
guard.
point. What
You
would that
see how I'm
mean for
scoring
Friday night?
easily.
Because
I'm trying to put 50 up. You got
the
let me.
analysts seem to agree with that viewpoint, but it's not where it was within the Max 7 this year, and there's been a little bit of skepticism around it. What's the fine point that you want to finish this
I
on?
don't know where my man be
The
at.
skepticism comes from what
Yeah,
investors
50.
would consider
That's
overspending
every man
on
I know.
AI, and I say, great, keep spending
Paint,
on
paint.
it. So any kind of sales, any kind of selling on the stock that comes from that concern, margins are down. I'm fine with that. I think go ahead and sell more, buy more, cheaper.
No, you ain't. No, you ain't.
I think
That's the
that
shit I'm talking about. Just taking that dumbass shit. We could get in the ball if you lagging. Like, stop shooting them shots every time you make you lag in.
What
Like,
they can do, again, it's not acquiring
Watch you lagging out. Watch.
That's not the big goal right now. It's monetizing those. And they are
I mean, look, the game closed because all this shit, bro. We could literally be winning, bro. They can't stop nothing we doing, bro. It's just when you come down and do them dumb shots, bro, they catch up and all this shit, bro. You can't repeat it, bro.
On all things meta.
The moment y'all be smart with y'all shots,
Take it away with your example trade.
this shit easy as hell. Oh my God, Reggie, waiting on it.
I don't know of a company.
You know what I'm saying? You gotta see that. I'm gone. This dude already in the point.
I mean, think about 3.5 billion data
You feel me?
points on a
When
daily
you used
basis
to be a point guard, you know where people are.
It's a tremendous
This game only
advantage
been
that
out
they
for
have.
30 years.
And I think the pivot that they made last
You
week
get me?
to kind of
30,
put some,
25 years of,
metaverse
26 years of 2K.
AI was
And
smart.
people don't know what buttons are, don't know how to dribble, don't see the lanes, don't see when the person open three, don't nobody know when to cut.
Very shrewd in how he
Man,
just,
that's why I don't even do this
and
though.
monetized it.
I was purple all last year, all the year before. Like, people don't even know how to play the
no
game
man's
for
land.
the past.
And And, you know, I talk about inflection
I would
point.
knock that down.
When I talk about
One stop.
I really see an inflection point here. And what I'm getting at is this. You have a stock that has pulled back from about an
I had to get on there and talk my smack to them people. Boy, just don't think about any kind of way.
For investors to step in, and they did.
I'm the coldest.
Now, it was one of the stocks that was on the top 5 of our stacks report last month in November, meaning that that's the report that shows buying activity from our investors, and it was one of the top 5. They used that opportunity, that 25%, 30% pullback in the stock to step in. At that 575 level, now we've rallied all the way up to what, 675, and before kind of pulling back around 645 right now. It's a bit of what we call a bull flag from a technical standpoint. The other thing that is kind of working maybe a little bit against that bullish case is the fact that the 50-day dropped below the 200-day, so you have a death cross. So there's a couple different technical setups right there that may be at odds with each other a little bit. So when I don't know what direction, or I don't have a strong feeling about the direction of where it's going to go, I look to maybe employ an option strategy that can make money in multiple directions, but it's got to move. And in this example, and to be honest with you down here, Kevin, I don't think I've ever brought this type of trade on the show. It's buying an iron condor. We've sold iron condors before, but I don't think I've ever bought an iron condor on the show. So I'm buying the Meta January 16th, buying the 660 calls, selling the 680 calls, buying the 620 puts, selling the 600 puts. So it's an iron condor, which means it needs movement. So you have to move, and if you do that for $11, which is, I believe, the debit that I was looking at the time, you need it to either move beyond 660 up to 671 for the top side break even, or below 620 down to 609 for that downside break even. So it needs to move, and it needs to move, you know, before that January expiration. But this is a stock, like I said, it already rallied back $100 off that November 20th low. So it's possible that it can happen, and it has a couple very interesting technical setups right now. I just don't know which way it's going to go, and so until that maybe some of that indecision gets taken out of the share price, I'd rather play it for a big move in either direction.
Kevin, quick thought, final thought on this one.
I'll tell you what, first, we've had long iron condors on this show before, Joe, but I don't think we've ever had a $20 long iron condor. So this is one that you're paying $11, hoping one side of this trade goes to $20. And Joe, frankly, as traders, we don't care which way, right? It can go to 600 or it can go to 680, and you're profitable in either direction. Where you don't want it to sit is right here. And so, yeah, playing for a big move, this is a way to do that with controlling the amount of debt. Remember, the only thing you ever risk is the debit page, Joe.
All right, guys, good stuff. We've got the breakdown coming up. We are taking a look at Walmart. Got some great shoes around it. See it bread on Wall Street today. More fast market after this break.
Like, what are you looking at? I'm running in and out of the page. I done ran back. My man at the half-court line. Do you not see the court? This is a video game. You don't have to dribble at your feet, bro. Like, look up at the whole floor, bro. Look, make my man quit. It's the same, dog.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's
all the
right
times
for
you
you.
want to shoot a 3.
The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help
Chad,
navigate
I'll probably miss one shot, Chad.
Swim and mobile
Out here
basic
with the
platforms.
Randeezes, they trying to
Best
sell
of all,
me, and
you can
I
ask
don't know what's
questions
going on.
by chatting directly with your education coach.
I don't know if I'm playing with kids or what, boy.
Tune in live or watch on
Look,
demand.
he don't see the floor.
Head over to schwab.com/coaching and start learning today.
All you gotta do is find me, boy. This is Larry Burt. I don't come out here to be playing with people, boy.
Well, Costco has been an underperformer in 2025. Walmart has been a clear winner. Shares of the world's biggest retailer are up more than 28% year to date. Investors have been bullish on Walmart's execution and strength across household income.
You know what I'm talking about?
High
I'm
low.
gone
But that
and you
doesn't
give it to
mean
the
there
wrong
are
person.
no challenges facing the retailer. Time
Ain't
now
nobody
for
else
the
to give it to
breakdown.
but
But I'm
me.
going to welcome in George Stilla, Senior Markets Correspondent, for the fundamental take on Walmart.
It seems like whoever you give it to, they just do something just
Outperformer
like,
this year.
I'm
Everybody's
not here to
shopping
open
there,
hand.
whether you have to or need to or you just want to now. What's the way you look at this one now?
I see the court. The cut.
Well, I think you gotta look at sort of the divergence between what's going on with Costco and Walmart. We talked about Costco yesterday and how it's been just drifting slowly to the downside in orderly capacity.
Don't have to
that
force
suggests
that
there's some distribution from institutions.
It's either you know how to take your man off the dribble, or you know how to get your shot, or you don't. Just hit the open.
Yeah, recalibrating, if you will.
Look, where he running? Just tell me where you're running to. Just tell me where you're running to.
Walmart, I suggest, a little bit of a different story here, because what I think is happening with Walmart is the breakdown of their sales.
I got 2 turnovers off just random passes.
Of their sales include things like food and pharmacy.
Still gonna give my man at least 13.
When it comes to demand.
There you go.
They've been able to raise prices, and that's accretive to all their core business across the board. The other thing is that the outgoing CEOs talked about some of the effects that inflation has had on a negative basis to lower income consumers, but they're also seeing more higher income consumers. So you have to ask yourself where they're coming from. Maybe they're coming from Costco. If you think of Sam's Club, which is a Costco competitor owned by Walmart, that company is sort of a membership-based business that is a lot more streamlined than Costco, offering lower price point products.
Well, I got double. I leave it right
quite substantially if you look at the last few quarters.
Yeah,
so I think what's happening here is there's been a shift in shopping preference away from maybe some higher-end areas of the consumer staples or non-discretionary areas to the lower end. And Walmart has benefited tremendously because we're already a low-margin business. And if you look at the net income margins in the past 5 years, on average, it's around 2.3 or 2.4%. The last year was around 3.3%. That's a 90 basis point increase in net income margins. That's a tremendous change, positive change for Walmart. And that small net income margin increase or profit margin just trickles down to the bottom line for profits of the business and shareholder value. And so that's essentially what's happening here with Walmart. We're generating solid sales growth, solid comps, gaining business from alternatives, and also Amazon too, which is competing aggressively in the grocery business. Walmart seems to have counteracted them in terms of their businesses for food delivery, their Flipkart business, but also their Spark business, which is general merchandise, competing with the largest sellable items on Amazon, which is the top 1 million sold by the business.
Okay, and Walmart moving its listing over to the NASDAQ, and maybe it'll play along with the tech players over there, hit a new all-time high today. Thank you, George. That's George Stilla, Senior Markets Correspondent. Let's get Joe and Kevin back here for example trade purposes. So this time, Kevin, you've got the example trade in Walmart. Let's see what you're taking.
Well, Diane, Joe, this is a very tricky one because it doesn't trade big premiums on their options. And the stock has run an incredible amount if you compare the chart to like Costco that has struggled. That said, historically, this PE ratio is quite elevated for a company like Walmart. So here's what I want to do. I did something relatively passive, which is I went out to the January 9th expiration and bought the 110 put, and then I completed my Joe Zola put calendar spread by selling the December 26th 110 put. Only paid 40 cents for it, Diane. Like I said, very low premium. But if you do get that move down towards $110, a little correction from where we are now, not very far, this spread would widen out quite nicely, and you do have a chance to chip away at that net debit when you extend duration. So 40 cents, very relatively inexpensive price for some downside protection in Walmart. You've got the Delta and the long Vega component, Diane and Joe.
Joe, Kevin brought the Joe special for lunch here. What's your thought on this?
I didn't know we were calling it, but hey, I'll take credit for that one. Look, the stock's up about 13% from earnings. I think George made some great points about the fact that they've seen a 90 basis point increase in their margins. However, how much of that's already priced in, and I think that that's probably what Kevin's questioning. If I look at it from a chart standpoint, the stock got overbought on the RSI for a little bit. It's starting to roll back down. Once again, it's another one of those interesting setups because it could be something where it continues to break out at an all-time high today. Could continue to go to the upside. If there continues to be this rotation away from tech, a little bit more into discretionaries, or I guess this is probably more of a staple. Walmart would be one of those companies that would be fantastic if that rotation underneath the surface continues for the staples because they are a relative strength leader within that field. Now, I think what Kevin's probably getting at is, once again, how much of this is already baked in? Could we see a bit of a pullback? If that is something that occurs, and we get kind of a bit of a grind back down towards that 110 strike, given the fact that these are fairly cheap or fairly inexpensive calendars that he put on, this could expand in value, could be a good trade. For somebody who's mildly bearish, isn't necessarily expecting this thing to fall completely out of bed, but is expecting a little bit of a retracement back towards the mean.
All right, there's your lunchtime Jill special there on that one, brought to you by Tim Hanks. We've still got pressure right now on market, but we're off the lows that we were hitting earlier in the hour. You got the S&P 500 off by just shy of 1%. Russell 2000 under some pressure as well. Our data populating off there, it's off by 1%. NASDAQ, the weakest of the bunch, that rotation out of tech continues. Dow off by 1/3 of 8%. Thank you for joining us today. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Jill Mazzola. Download the Schwab app, the network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around, you got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and the tools of webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. Ring the opening bell. Ring the closing bell. We've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change in MBS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play and a risk-defined way you're going to earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, perspective, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com. Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, as we check out on markets here, we are seeing some pressure that's been pretty much consistent throughout today. I will say that as far as like news cycle was concerned this week, there was a lot of positive developments. It doesn't really feel that way when you look back at the week that it was, though.
Yeah, all things considered, though, if you're going to have a down move, in some ways, you'd prefer to have it on decently strong information as opposed to the other way around. So perhaps this is, just some repositioning, some adjustments, some rotation, because even under the surface, Jenny, you still have about half of the S&P 500 names higher on the session. It's just a different group of names. We're going to speak, obviously, about Broadcom today. That's a big part of today's story, as one of the biggest companies on the planet, but also the ripple effects you're seeing through its other mega-cap tech peers. So, all that to be said, the losses have been cut by about a third intraday, and, down 0.9% from an all-time high close. As long as this doesn't escalate into a 2, 3, 4, or all of next week type of selling, this is just markets. They don't go up every day.
That is very true. And, I guess also right now recovering off of lows we saw earlier is also helpful. But you look no further than NVIDIA and some of the price performance of this week, and it's been pretty lackluster. As we do tend to check in on NVIDIA for a good read on our overall markets. But Broadcom, we'll dive into those numbers later on, really was one of the key catalysts that sent a lot of the tech names and AI-exposed names lower. And that's sort of what I see. It's always how you depict the market, of course. Like, I tend to see the market from the eye of tech.
Let me get her in here.
I think it's probably the way a lot of people see it right now, but that has been disappointing this week.
Yeah, and in many ways, it's the right way to think about the market, right? Because it's such an outsized portion of it. But there are other things in the market, and depending on where you're positioned today, you might be having different performance. But it's not the only story that we don't spend a lot of time talking about yields, but we got a Fed rate cut, and we've gotten the longer end of the yield, so your 10, your 30 years actually move higher throughout the week. So some interesting dynamics playing out when you look at kind of the entire gambit of financial markets. But all things considered, what does it all point to? It points to growth and productivity and everything remaining stable, not falling apart. And so if you're going to choose, hey, reasons for the market to go down, recession is like the absolute worst one you could pick. We don't have information that leads us to believe that that's on the horizon. It's always on the horizon in some way, but like right around the corner, I should say.
Yeah, I think a good point there as well. And as always, I know we don't dive into the macro super heavy on this show, but great summation of what we're seeing with some of the overall turbulence in this market. So we'll kick things off here on our show today with some of these movers to keep on your radar. We will also then be diving into some actually earnings that are still ahead. We do have about 99% of the S&P 500 companies have reported, and I think it's probably even closer to 100. We do have a few names still left on the docket, Micron as well as Nike. We'll also be discussing, as promised, the Broadcom numbers and really what sent a lot of the tech trade today lower. Gross margin guidance is pretty critical to this report that I will say, all things considered, actually still pretty strong despite about 10% contraction today. We'll also look at some factors that are really contributing to the slight decline we're seeing in alcohol consumption amongst Americans, specifically young Americans. And we'll discuss some broader trends we're seeing in Tesla with EV sales flipping, as well as closing things out here with Rivian, which has had actually some positive development as it does push into the world of autonomy with development of own ships. So a lot of development coming up yesterday. I think we got a ton of that updated focus from Rivian's force management.
Yeah, there's a lot of company-specific news this week. It seems like we're late in the earnings season, but there's like this final wave that we've gotten, and many of the names we're going to discuss here at the top of the show are earnings-related movers. So let's jump into those. Looking forward to that Rivian conversation a little later on with Jewel. Lulu, it seemed like it was starting to maybe turn a corner. Maybe it's continuing that with new leadership, Jenny, because we not only
she comes in here.
financial update, but we also heard CEO stepping down.
See, and I think that's really what's driving. I mean,
Well, Sheldon, are you there?
Yes, no.
Okay.
Did you ever receive my email from last week?
I received it, and it had a lot of stuff in it, and it was confusing, and it looked like you was writing to multiple people and stuff in there. It was
Heck
just a lot
yeah,
going
because
on.
it wasn't confusing.
It was a lot.
Well, let's unpack.
Okay. Yeah. So I'm just trying to check in. How are you feeling right now in the moment?
Man, I just got my phone back. I can't get a hold of you, my assistant. I tried to leave a message Friday. You know, family was doing the most last week, still on my phone. I came down there trying to, what was it, last Wednesday, somehow got caught down there. I didn't even realize it was Friday when I was down there. You know, the Tarika I almost thought I was going to have to not work with her no more, because she took me to the lawyer's office, and from there, she has been gone, just spotty. And, even yesterday, we were supposed to go down, and she said that, we were going to do something, go to the UPS office, and people are just disappearing. I'm like, why ain't no one answering their phones or anything? And
well, with me, I'm gonna tell you, with me though, my caseload stuff is picking up, so I'm not as available like I used to be at the beginning. With her, I'm guessing because she has multiple people on her caseload, that could maybe.
Yeah, I never knew that at all when I signed on with her. I thought she was like a personal thing, because from there. Yeah, she never told me that, and then the stuff that she did tell me, our services, it's like everything is changing. Like, I didn't realize that she had a whole caseload, and she can't text back, she can't do nothing that she's saying. And I told her, like, everything that I asked her to do, I pretty much can do over time. So, I'm just like, what the heck?
But how are you doing? You just telling me about things that happened.
I'm mad because I'm mad because I can't get a hold of anybody. It's not just you guys doing it. It's like the whole world. Yeah, like when everybody's not answering, no one's answering, seriously. So my mom is doing this. The girl I was messing with started doing this, and this has been lasting for like November 20th. I started vaping again. People have been trying to stress me. I'm just like, what is going on? So, okay, from November 20th, AT&T took some money out of my card, like overdraft my account, my Chase account. So I ended up getting paid like before Thanksgiving, and I went to deposit my check with U.S. Bank, and the U.S. Bank didn't get my money at all. Like, the message on the app said that your money will be ready on the 29th. The 29th came, I never received my money. So, like around the 3rd or something, I called them, and I was just like, what's going on with my money? Why is my check depositing? Because I have to pay rent, I have to, I already done started spending on Black Friday. I had to get groceries from Thanksgiving, and around that time also, the 22nd, I was here with let me see. Sure, I'm about to cut y'all go so I can talk to her.